These stocks are incredibly weak. These stocks are showing no signs of bottoming. They just keep going down and down. Let's buy when people are scared, right? Let's sell when stocks are overvalued. And we play that game. People are just silly in the market. But that's what makes it a great market for people like myself. Unbelievable. One of the most insane things I've ever seen in the market, where somebody took their portfolio in a matter of like 2 months from a few $100,000 to millions of dollars. Zuckerberg is 41 years old now. He just entered his business prime. Think about what this man has built over the past 20 years, right? A company from nothing into this gigantic company that even the governments fear. From a 50% drop, if you're heavy on margin, you lose everything. You're back to zero. If I'm in good health and I stay hungry, imagine what lifestyle will be like in 17 years from now, right? Imagine vacations. We're talking private jets. Wall Street was so caught up in Nvidia last year that they totally missed AMD. Is this the greatest investing environment of all time? The answer is, holy smokers, folks, this ain't no dang jokers. Adobe, Salesforce, these stocks are incredibly weak. I mean, it's almost shockingly weak. These stocks are showing no signs of bottoming. They just keep going down and down and down. We're so low, we're below Chinatown now at this point in time, right? So I want to spend the front part of this video talking about these two stocks specifically, because I believe these two stocks are phenomenal opportunities over the next 3 to 5 years. Clearly, the market disagrees with me right now. So one of us is going to be right and one of us will be wrong in the end in regards to Salesforce and Adobe. We'll see who it is. I want to talk about my opinions on these two stocks in this video here today, because I believe they're two of the better opportunities you can find out there, especially when we're talking about $100 billion+ market caps out there. I want to listen to some Wall Streeters give their opinions on these stocks, okay? This gentleman on how AI is eating software stocks. This is going to be an important video to react to in this one here today, okay? This video, software stocks will rebound from AI scares, says this gentleman from Davidson. So that should be an interesting one to hear from, kind of bullish and bearish takes, right? Stephanie Link sold Microsoft. So I think this is interesting because kind of plays in there with that dynamic of some of these sorts of stocks, right? And then I wanted to cap today's video off talking about AMD stock. AMD is now gone from, it was showing a lot of weakness to like rally mode at this point in time, right? And obviously AMD stock's been a phenomenal stock over the past year, up 95%. But this momentum specifically in just the past few days has been significant. This is a five-day chart on AMD. It's up over 14% in the past 5 trading days, right? While look at Adobe in the past 5 trading days, and Salesforce is down 11.5%, Adobe's down 9%. Like, these stocks just sell off and sell off, okay? So a lot to get into in this video regarding these 3 stocks. I appreciate everybody for joining me. One thing all I need from you, if you could just smash that little like button, that means the world to me, okay? That's all I need from you. If you want to be subscribed here to the channel, you can certainly subscribe as well, okay? Alrighty, so first off here, let's talk about this gentleman and his opinion, and then we'll kind of go from there, and we'll talk more in depth about Adobe, about Salesforce, the opportunity I believe that exists here, and those sorts of things. So let's get rolling.
Hey, Mike. Great to be here.
I mean, the market is starting to obviously register a ton of concern in this direction. Software as a sector is probably at record underperformance versus the semiconductors last year or two. You say more to go. Why is that?
Well, I've been through this before. When Amazon came out, there was a whole cadre of companies that were like, no one will ever put their stuff up in the cloud. It's not secure. It's this. And they pounded they go, they got on this network and they go, this won't happen. They sent me hate mails, but their stocks never worked. The market got it right. It discounted the disruption.
And
that
back
was
then,
coming.
you're talking about stocks of
like
the hardware
Dell,
makers.
IBM, well, the HPs,
sure, database
maybe even Cisco.
Yeah.
I mean, Dell stock didn't work for 7 years and then had to go private. Yep. Michael's a friend now, but I don't think he liked me too much back then. I'll tell you this. These companies in software, they had it so good in the 2010s, and it's over. And I think people can see what's coming. The marginal cost of coding is going to zero. And your traditional reseller checks, your traditional doing EV to free cash flow, which is not even free nor cash flow because they give so many stock options that in order to buy it back, it's really a lot lower. They're getting their comeuppance, and people are seeing what's at the end of the rainbow.
So you say the marginal cost of coding is free.
It will be.
So first of all, what does that mean for Anthropic or something like that, where they're actually giving you these agents and running the models, and it's just going to be some kind of cheap subscription?
Yeah. Well, it's good for them because they keep innovating on the models, and what they do is they put out co-work, right? And for them, they can put those things out, and they're very competitive with Microsoft right out of the bat, and what it shows is that when you're an athletic, private company and you can come out with stuff like that, it is disruptive. Now, Microsoft could win because of Azure and other things. Mm-hmm. Thank God they have that. Sure. But people are very concerned about the traditional franchise.
I mean, what I said to Brent Thill, who also was arguing this last hour, is that, the software companies, the Workdays, for instance, would say, these models, they don't have as much specialized data and expertise in what they're doing as they do. And so eventually, if AI is going to be about trust and data, that they'll be in demand.
That's nonsense. Whoever owns the data is the winner, and the ability to do an agent and the coding will be a commodity. And the data connectors, those who connect the data, AI is going to get so good that you're going to be able to have AI first, agent first startups. Maybe not this year, maybe not next year, but within 5 years, do things that you can't imagine right now. And people are seeing it. The stocks don't work. Our job is to pick stocks, and these companies that pound it, it's not, the stocks know. Companies are not paying extra for AI. We were supposed to have all this ARPU growth. It's not happening.
Yeah, it's interesting. I mean,
there's so many different angles here, okay? First off, big company, go replace Salesforce. Good luck. You got a Salesforce product suite integrated. Go replace them. Go. Good luck. And if you're going to replace them, you're going to go with somebody that's a direct Salesforce competitor, which is some other software company. You can't just you can't be in the Salesforce software suite and be a company that has, 5,000 employees and be we're just going to go to AI. What? No. Go switch off Adobe. You're a big company. Go switch off Adobe right now. Go. Dare you. You can't do it. You literally can't do it. And if you were to try to do it, which is nonsense, that's ridiculous, you're going to end up in some product category or product that's a straight competitor to them. When you work for a mid-sized company, a large-sized company, and you get these products integrated, you realize you're in the ecosystem. It's near impossible to leave. You could technically leave, but it's difficult. No different than if somebody's in the Apple ecosystem. They stay in the Apple ecosystem. The best Android phone in the history of mankind can come out tomorrow, and none of us that freaking use Apple devices are going to buy it. Because we're already in the ecosystem, we already used to using it, we know where everything's at, and we're just content. We're just okay, that is what it is. So unless Apple was to super disappoint us, the product went to total garbage or something like that, we're just going to keep buying the device again and again. That's the same way these companies work. You got all their employee forces all used to using it, management. Oh my gosh, to switch to something else, some AI, what? And then to have it all in one place, it's just is ridiculous. This gentleman sounds like somebody that's never worked for a big company before. Literally, that's how he sounds. What are we talking about here? You ever worked for a big company before, dude? Crazy. But hey, anyways, apparently he thinks, Adobe, Salesforce, ServiceNow, Palantir. You throw Palantir in there, everybody's just going to get replaced, magically by something that's wild.
It's true across the board, but I do want...
This is a thought process that's going on right now. And now you can see clearly why these stocks are so weak. Because it's just crazy talk. But remember... They were talking like this was about AMD a year ago, right? Remember the analysts we listened to here on the Reaction Channel about a year ago or so? Maybe it probably was even less than a year ago, 9 months ago. It's I'm not even sure we need AMD, right? Now all of a sudden every big company out there is trying to partner with AMD. They were saying, remember last year when they were saying it about Google? Google's been disrupted by OpenAI. We're not even sure Google's going to be relevant anymore, right? Oh, and now Google's what? Up to the second, third biggest market cap in the world, and now everybody wants to own Google stock. He's crazy, man. Crazy. But a lot of these guys' opinions, is the stock going up? Oh, everything's great. Oh, the stock going down? Oh, everything's horrible. They're done. Crazy.
If a lot of the enterprise software companies are going to run into this thing where their customers kind of didn't love them, in terms of how they were paying and everything else.
I have some points on that. You see, we did this 2 years ago. We made this call. And the thing that really bugged us was that the software companies raised prices since COVID 40%. higher than the rates of inflation by a lot. They had fake seat growth due to COVID. And that's even before AI. So if I wrote that report, you'd be really upset. And so much of their earnings were stock options. I think, right now, Adobe, Salesforce, all these companies, you think they're super cheap. Well, there's a lot of stock options in their earnings too that they add back.
Yeah.
So, we'll have to see. But that's what I saw too. And the customers are want to push back. And there's all these new kids coming out with new startups that aren't going to do it the same way.
Okay. Next one up here. Software stocks will rebound from AI scare. The moral of the story, to recap that last video, okay? What I want everybody to take from that. Well, one, you can take his bear stance. Like, if you adopt that bear stance, fair play, okay? Second thing I want you to take away from that video is that is the sentiment that is all over Wall Street right now regarding these stocks. And that's why they haven't been able to find a bottom yet. Until you get enough people to say, you know what? Actually, maybe these stocks aren't going to become irrelevant. Maybe their customers are going to stay signed up for it. So how does that happen? When does that happen? Keep putting up your numbers. If you're Adobe, if you're Salesforce, keep putting up your numbers. And guess what? They'll come to you. They'll come to you, just as they did Google. Just as they've done with AMD.
Davidson is out with a note today on software valuations. Gil, great to have you with us. I take it that you heard Carter's analysis of the space. It's not a very rosy picture in terms of performance past or performance future. So why do you think this group, what are the fundamentals that will drive this group higher when they've seen such underperformance for the past 5 years?
Yeah, the simple reality that software businesses are still the best type of businesses. They are recurring revenue businesses that scale well at very high incremental margins. None of that has changed. The good news is we used to talk about software companies a multiple of revenue, and who can really tell the difference between 6 times revenue or 8 times revenue? We don't have to do that anymore. We have great software business growing double digits, 20% and higher, that are now trading in the teens on cash flow, on the 20s on cash flow. Those are attractive price points. And we don't have to fight Carter's charts. We're not calling a bottom on all of software. We're just being selective about the stocks that are doing so well, the companies that are doing so well, and their stocks keep going down every day, that we believe that if we continue to buy those, there will be a re-rating once this wave of negativity is over. Because again, there has been no AI impact on any of these companies. AI has not disrupted or dislocated any software company. And if it doesn't do it this year, at some point we're going to scratch our heads and say, isn't AI just a disruptive technology that good companies are going to adapt well to and bad companies are not going to adapt well to? So if we buy the good ones, they're going to do well.
All right, Gil, so Adobe made its all-time high in, I think, the fall of 2021. Think about that for a second. Think what the market's done in the meantime. And we're trading the levels that we last saw in the fall of 2022.
Adobe back then, let's be very crystal clear about this, okay? The difference between Adobe back then, when it set those all-time highs in 2021 and where the stock is at now. Let's be very crystal clear about this. Adobe back then was an overvalued stock. As simple as that. It was overvalued. Look at the trailing 12-month P at that particular time. Look at the forward P. Look at the 2-year forward P. People were paying way too rich of a price for that stock back then. It was overvalued. Be very crystal clear about where the stock price is right now. It's significantly undervalued. This stock is not even anywhere remotely close to its historical trailing 12-month P, forward P. It's not even the same ballpark. So we went from a dynamic with Adobe is back in 2021, extremely overvalued stock, didn't deserve to be trading there. Now Adobe, very undervalued in my opinion, extremely undervalued. Doesn't mean it can't get more undervalued. Adobe could go 200. Is it 298? It could go 200. Who's to say where the bottom is, right? You never know. It could bottom today, could bottom tomorrow, could bottom next month, 3 months from now. Bottom could be 275, 250, 290, 200, 180, who knows? But the moral of the story is it should not be trading at these sorts of Ps. Not with this sort of revenue growth they have in the earnings per share growth and the stability of the business model. Crazy, man. It's crazy talk. So, you had an overvalued stock, now you have a very undervalued stock.
What's the bull case here, other than the fact that technically we're hitting what should be support, and you can make a decent case on valuation?
So the bull case on Adobe is, for all of the negativity around AI, Adobe's growth has actually held up better than the overall software universe. Their growth has decelerated from maybe 12% to 11% or 10% over the last 3 years, which is to say that really strong recurring revenue business that's embedded in every marketing organization and every agency has held up really well. And to your point, the stock has not. It's now trading at low teens multiples on earnings and cash flow. If they just keep doing what they're doing, which is grow 10% this year, then it's not going to be sustainable that their stock will continue to be this inexpensive. That, which isn't to call for a catalyst here. They're just going to keep doing what they're doing. It's the narrative that's been very negative about Adobe, again, without evidence. They haven't lost any business to AI, nor does it look like they're going to lose business to AI this year.
What's your take on the Oracle, the bondholders lawsuit with Oracle? They allege that, there might have been malfeasance. Maybe there should have been more disclosure at the very least, because they bought these bonds in September, and then several weeks later, Oracle went out to raise another $38 billion, and they feel cheated. Is this going to be an overhang as companies go again and again to the debt market to finance?
Yeah, Oracle overextended itself for OpenAI. OpenAI promised them the moon, and then Oracle realized that OpenAI actually had promised everybody else the moon as well. And then they overborrowed to build infrastructure. They're now at the very bottom. They're approaching the bottom rungs of investment grade. They're approaching the ceiling of debt ratio, and yet they need to borrow more in order to deliver on these commitments. So they put themselves in a real bind. The stock's gone down a lot. Their debt is trading at a discount. And it's not too surprising that recent debt holders feel like this isn't what they bargained for when they bought the bonds a few months ago.
Okay, listen. Regarding Oracle, they showed Oracle there and Salesforce in the same graphic, right? Listen, those two companies should not be compared at all. Very different plays. Oracle is more of, honestly, nowadays, it's kind of morphing into more of a hardware play versus Salesforce software. But listen, look at the balance sheets of those companies. They're not to be compared. Salesforce has a strong balance sheet. Oracle's balance sheet, nasty. And it's going to get a lot worse, likely, over the next few years, as they have to take on likely massive debt loads to do what they're trying to do here. And then additionally, like, Oracle's just looking like it's a bad business model in terms of what they're getting into over the next several years. It looks like a very low margin business, whereas Salesforce is a high margin business, right? So I don't think those stocks should be compared. I really don't. Oracle could be an opportunity, but the bottom line is, like, I think Salesforce is much more of a sure thing, if there's such thing as a sure thing in the market, a much more sure thing than Oracle is over the next few years, okay? Alrighty, let's get into this next one. And then we'll talk AMD.
Yeah, I mean, I only had a very small position after the company reported last quarter. I thought the quarter was very good, but the stock has not acted very well. I'm down. I was down about 2%, and I just see, like what Josh just said, like, he's looking at some other sectors. Well, I have been adding to some, like, energy positions. I added to Chevron 3 times. I added to SLB last week. I'm looking at Dow Chemical now. I'm looking at the commodity cycle as well.
This is an issue with Wall Streeters, in my opinion, okay? They're too focused on the short term. She's talking about she's selling Microsoft. It's not acting well, the stock price, right? Moving into Chevron, moving into energy stocks, right? All this trying to get in, trying to get out, trying to make a penny here, and then you lose another penny here. It's silly, in my opinion. You own great companies, you hold them. You get better pricing on them, you buy them, and you hold them. They get overvalued, or you find a much better opportunity in the market for the next several years, then you can sell, take your profit, and move out. You made a mistake, you screwed up real bad, okay. Sell it for a loss. Like, it's like the fundamentals of the company. So let's say I'm buying a lot of Adobe and Salesforce right now, okay? Let's say over the next 2 years, Adobe starts going negative revenue, Salesforce starts going negative revenue, right? Literally, their revenue's in the red. It's going down. I'll have to move out of those stocks and take a loss, right? I don't think that's a very high probability, but it's a possibility. It can always be wrong, right? You're never going to bat 100% in this game. Sometimes you will sell stocks for a loss. That's part of the game. That's part of the process. There's no sweat in that. That's, what do I call that? What do I call that when you got to lose money on a stock and you got to sell for a loss? The cost of doing business. You want an opportunity to buy the next Palantir, the next Nvidia, the next Tesla, the next whatever, right? AMD, go through the list of them. Sometimes you're going to have to sell for a loss. Sometimes you'll make a mistake. But you've got to stay focused on the long term. What's the long-term trajectory of these companies, right? You can't get caught up in all this other stuff, man. It's crazy. So if what I said makes sense there and you want to take things up to a much higher level, pin comment down there if you want to apply, join a private group. We have a group of 3,000 investors along with me that we focus on the long term. We're not focused on like getting out of this stock so we can get into this stock because that's where the money is rotating right now, and trying to play there's such small money. It's so like we're focused on the big money, man. Like it's crazy. It's crazy. All these people doing all this wild stuff, and I'm like, dude, you could just play this game so much simpler. Let's research companies. Let's run projections. Let's make sure we're paying fair prices for companies. Let's buy when people are scared, right? Let's sell when stocks are overvalued. And we play that game. It's so in my opinion, as somebody that's been in this game 17 plus years now, so much easier. Is it not? So much easier. And guess what? It's so much more money to be made that way. Because you find a great stock and it goes on a 2,000% run, and you sell after it went up its first 20%, you missed all the money. Who cares about the first 20%? It's nothing. We cared about the 2,000%, right? You got a stock that is about to go up 300% over a 3-year span, and you sell the first time it goes up 13%? What? Oh, we got to rotate the money because now I think the money's going to go here. Okay, you played yourself. What are we doing, man? So anyways, if you want to join a group of long-term focused investors, we got 3,000 plus members in my private group. That will be the pinned comment down there. Like-minded people, the type of people you want to be around, 6, 7, 8-figure investors. Like, it's not all this just silliness, man. People are just silly in the market. But that's what makes it a great market. For people like myself, we find these arbitrage opportunities, and we're right a lot more than we're wrong, and we just get such attractive pricing. And then people come around and they're like, oh, shoot, that was a big opportunity. And it's like, yeah, you missed it, but it was there for you.
Because I do think it has legs for sure. And I think that maybe, just maybe, the Mag 7 take a pause. We're seeing it. They've actually have already taken a pause. But I come to, Frank, the valuation on this one, it's just not compelling to me. I would rather, as I mentioned, I'd rather own Broadcom, which has industry high margins, industry high free cash flow. The AI, it certainly has exposure to AI, but it also has exposure to some software with VMware. It's diversified. I love the management team. They're buying back a boatload of stock. I would rather pick that name that's down almost every single day since they reported earnings back in December, or I'll go elsewhere. The only 2 Mag 7s that I own now are Meta and Amazon, and I'm frustrated with both of them, to be honest. But I think Meta at a one times peg is too cheap for the growth that you're actually getting and the monetization that you are seeing in terms of time spent. That has been up about 5 to 7% over the last couple of quarters. So that's one I would also take a look at. And then Amazon, I think you win 3 ways, right? AWS is accelerating, retail is growing like leaps and bounds over anyone else, and advertising up 22%. Those are 3 great businesses. Yeah. And the stock is so frustrating because it's like flat over the last year. So there are other places I'd rather put my money.
Oh, you do own Broadcom, maintained as a top pick over at Oppenheimer. Jason, coming over to you. You own Microsoft. What do you make of Steph's points? I mean, she made it a pretty compelling case to sell out of Microsoft.
Yeah. Listen, the price action hasn't been great. That's for sure, especially over the last 6 months. And I think one thing we could all say about 2025, which I think was pretty straightforward, is these names don't trade as a monolith. There's no doubt about that. Microsoft is expensive. I think some of the OpenAI news is kind of a little bit of a drag on the stock. I mean, but again, 18% revenue growth on a company this size, 25% EPS growth, Azure continuing to accelerate. I think there are some things to like. The
PC market maybe continues to lift into this year. So we're going to stay patient with this one, but I definitely understand all the issues you might have with it.
Well, the patience that you may be having may be related to earnings season. By the way, Dan Ives out with a note saying that earnings season should be AI validation for the bulls. Goes on to say he believes tech stocks are going to have very strong Q4, especially Microsoft, Alphabet, and Amazon. The cloud stalwarts is what he calls them, and that's based on his field checks. Josh, I want to come over to you. Are you expecting a very strong earnings season? And by the way, it kicks off in just under 2 weeks when Meta and Microsoft report on January the 28th. Are you expecting a strong earnings season specifically tied to tech?
Yes, because the chips are telegraphing it. So the most, that's like, to me, the most important tell is people are buying these chip names with abandon. The Micron rally, it just tells you that, like, there's not even commentary in the industry about anything having slowed down from last quarter to this quarter. So yeah, I do. I don't know that helps you. We had great earnings. We had great earnings the last time they reported. In the winter, they reported the fall quarter, and a lot of these stocks are not higher. Stephanie points out Amazon and Meta, and it's not a given that you'll get great mega cap tech earnings, and that will somehow mean 12, 13, 14% rallies in these stocks. It didn't work last time. So I don't know how much that helps you, pointing out tech is supposed to have 29% earnings growth this year. Do you know that? The net.
Oh, so listen, Meta, Amazon, incredible opportunities in the market, 100%. Like for big tech or Mag 7s, like yes, two of the best opportunities, if not the two best opportunities in my opinion. If you're thinking about for the next, let's call it 3 to 5 years. If you're thinking about the next 3 to 5 weeks, months, who knows, man? We're just flipping coins and throwing darts at a dartboard. But then the next 3 to 5 years, I believe Amazon and Meta are two of the best opportunities for the Mag 7 $1 trillion boys club, right? Additionally, he was speaking there for a moment about something I thought was really interesting. What was it here? MU. I got a Micron story for you. So I have a friend, close friend, who lives in Vegas. He's been a Micron shareholder for years, and the stock has never really made him that much money. But he stayed loyal to this stock year after year after year. It's his biggest holding by a mile, his biggest investment by a mile. And let's just say the man's fortunes have changed. He's doing extremely well for himself in all those years of buying Micron stock. It's all come to fruition, and now he's doing better than he's ever done financially. Let's just put it that way. So, it's definitely a stock because there's a personal connection there that I root for a lot, and I'm like, good for him that he's like making a killing now on that stock, right? AMD. So, what's my 2 cents on AMD, or do I think the stock could continue to rally? And listen, regarding AMD, the stock could absolutely continue to rally strong all the way to summer. Doesn't mean it's gonna for sure do that. But let me lay out the case why AMD could rally very strong all the way to summer. We know 450 goes into production and ramps up, around summertime, right? So what ends up happening is this is the biggest chip thing to happen to AMD. First off, the 355X, that's in production now. That's they're selling a lot of those. That's going to make the numbers great that they're about to report, the guidance strong, all those sorts of things, right? But really, the real reason everybody's really investing in AMD is because of the 450 series chip, right? Which once again goes into production likely over the summer and then ramps throughout the fall time, right? So usually what happens with the stock is there's a ton of hype and momentum before you get to that thing that actually happens. So that's where I can make a case where AMD could be extremely strong all the way to summer, essentially. What could happen, let's say hypothetically this plays out. AMD's insane, just an absolute beast the next, we can call it 4 to 6 months, right? It's just running like insane. And next thing you know, AMD's 300. 350, 375, and we're like, oh my gosh, this stock's insane, 400, right? What could happen after the production starts at 450, you could actually have a sell down, a nice size drawdown in AMD. because now you're actually at the time period. It happens all the time in the stock market. And for any OG investors watching this, you know exactly what I'm talking about, right? Buy the rumor, sell the news, they call it, right? Where you just have a lot of excitement and hype going into something, that something happens, and then, the stock actually falters after that particular point. Usually Wall Street would call them the dumb money, gets in at the very end, like right before a thing happens or right when it happens, thinking that's where they're going to make the money, when really you needed to be in that position already, 6 months, 9 months, if not 12 months prior to that thing happening, right? And then that money realizes, oh crap, the stock's not going up, it's actually going down. Now they actually got to this big moment, they start selling, margin calls happen, you get some, option activity that works against the stock. It's a whole situation, right? So anyways, that's my 2 cents on AMD. Additionally, if you want to apply to join my private stock group, that will be the pinned comment down there. Access to all my course curriculums, 3,000 plus members in there. It's an incredible group of individuals, 6, 7, 8-figure investors. We'll send you your Steel membership cards in the mail once you join us in there, and also get full access to 1000xstocks.com, which we're making a lot of tweaks in the back end right now. Sometimes in the stock market, you get into a very strange, interesting market. We have a market that is very confused on where it wants to take these flapjacks at this point in time, ladies and gentlemen. NASDAQ is down year to date. Now, this is very interesting because if you look at something like silver's up almost 24% year to date. Ladies and gentlemen, we're not even halfway through the first month of the year, and silver has rocketed 24%. I mean, it's insane, absolutely insane, while the NASDAQ's actually gone down, right? Which makes me think, I have a friend who's keeping an eye, let's just put it that way, on a few of my big silver bars. I got a bunch of those silver bars somewhere in storage, some are not, and I have a friend that's keeping them, and I said, hey, you keeping that silver safe, right? He said, sorry, wrong number, which means I'm pretty much done ski, folks. TLT, look at this. TLT is actually up year to date, and it's beating the Qs. Now, this is interesting because I have another friend, and this friend, he predicts that TLT, this is a big prediction he made going into this year, he's predicting that TLT is going to do better than the Qs in 2026, which is a pretty big prediction to make out there, right? This individual is very good at short-term calls, I'll tell you that. He literally took this individual, we ended up becoming friends over the years, but to give you some reference on this, he joined my private stock group years and years ago. And he went from a situation where he had a portfolio of a few $100,000 to he ended up taking it to several million in 2020. He documented it all in the private group. If you were in the private group back in those days, you remember who this individual is. Unbelievable. One of the most insane things I ever seen in the market, where somebody took their portfolio in a matter of like 2 months from a few $100,000 to millions of dollars. It was like life-changing money for him. Good for that. And this is his big prediction. TLT is actually going to outperform the Qs in 2026. So I'm going to keep track of it. We'll see if he's right or wrong in regards to that. Crude oil is absolutely rocketing so far this year, up over 7%. There's all types of geopolitical situations going on out there. It's ridiculous. It's like a full-time job just keeping up with all that. But this is no bueno. GSG is honestly skyrocketing so far this year. It's already up almost 5.5%. GSG's commodity basket, the index. So the way to look at this is if GSG keeps going up, ladies and gentlemen, we're going to have inflation come back. And that's going to hurt the consumer later on this year. That would hurt the market later on this year if GSG keeps rolling, because that would put into doubt any more rate cuts. It could even put rate hikes on the table. We'll see. It's no like nail in the coffin as of right now, but it's something to keep an eye on. You don't want to see GSG rolling the way it's rolling. I mean, once again, we're not even halfway through the first month of the year. To already see GSG up 5+%, no bueno. So it's something to keep an eye on. Everybody should keep an eye on GSG, okay? Then you have a stock like Meta. This stock was so weak in the back half of last year, and it's still so weak. Look at almost down 7% year to date. What is going on here, right? Why is this happening? Is Meta in trouble? Like, do we have big problems here? I'm getting a lot of questions about the stock. We're going to talk about it, right? Other big techs out there, look at a day like today. Intuit's down over 7%. Shopify getting chopified, down over 6% here today. Oracle, down over 5%. Avago, Broadcom down about 5% here today. You got AMD bucking the trend. Look at AMD going up even with all these other stocks down, which we're flirting flirting with almost a double up on AMD. Look at that, 99.4%, now up $283,000 in the public count. Oh, AMD's a beautiful stock. I absolutely love that stock. I wonder if that was one of the stocks I bought here today, right? Speaking about buying stocks, I've been itching to buy some dang stocks because I was on vacation. You guys know that, right? And I've been itching to buy some stocks, and finally I gave in and I bought a lot of stocks today, as in 8 stocks. You almost never see me buy 8 stocks in a day. It's almost like a flip and flapjack in portfolio I bought today. It's insane, right? I did that today, ladies and gentlemen, okay? In today's video, we're going to speak about 3 core subjects, okay? One is Meta stock. What is going on here? It's a huge position for me in the public account. I'm getting a lot of questions about Meta. Is it a great opportunity? Is the stock in trouble? Are we going to keep going down? We're going to see a 500 soon, right? We'll talk about Meta, what's going on there, where things are headed, okay? 2, margin. New margin data just got released here very recently. I want to go over that, talk about that, and how that's going to impact the market moving forward, and give a few perspectives on that, maybe drop a couple gems, okay? Third subject we'll get into today is I bought 8 stocks today. That's insane. That almost never happens. Like, you might see me buy 1, 2, 3 stocks in a day. 8 stocks? Like, come on, man. But there's a lot of opportunities out there. We'll speak about that. I'll show you the stocks, and we'll discuss that and why I did it, okay? One thing only I need from you guys, if you could please just smash that like button on this video. If you haven't already done so, please do so. That's all I need from you. That's your one payment for this whole video, okay? It's going to be like a 30-40 minute video, and all I need is one little smash of that like button. Please do that for me. Additionally, if you want to be subscribed to the channel, you can certainly subscribe. Higher probability you'll see my content in the future if you're subscribed. It is free to do so. And additionally, if you want me to talk about any certain stock, leave it in the comments section of this video. Hey Jeremy, can you talk about this stock, that stock, whatever. Whether it's a stock I've talked about past on the channel, whether it's one I personally own, whether it's one you've never heard me talk about, or maybe I just haven't talked about in a while, leave it in the comments section. Let me know. I'm all ears. One of the reasons we're talking about Meta stock in this video is I got a lot of comments in the past couple videos of wanting me to talk about Meta stock. So here we're going to talk about it, right? So you want me to talk about stock, leave it in the comments section, and we'll see if I can talk about that maybe over the next week or so, okay? Additionally, the pinned comment down there today will be if you're looking to apply, join my private stock group, get access to all my course curriculums, private Discord chat, 1000xstocks.com, all that good stuff, okay? Exclusive weekly videos, pinned comment down there, fill out that application. We'll see if we can get you in there. That is open right now to new members. It was closed for a long time, but it is open for new members as of right now. We'll see how long we actually keep it open for, but it is open right now, okay? Join us in there with the 6, 7, and 8-figure members. Alrighty, so Meta. Listen, this is a great stock. No debate, right? Great stock. It has made me $800,000 in the public count. That does not account for other portfolios I have it in. That does not account for profits I've taken in the past in the stock. $800,000, up 434%. It's a banger. It's a great stock. But with that being said, we got to also admit the stock is incredibly weak lately. Like, incredibly weak. How weak are we talking in regards to Meta? Look at this look at this bunch of shares here, by the way. $339,000 of profits I have there, and I only put $60,000 in. That's insane, right? So how weak are we talking here? This is a 1-month chart of the S&P 500 versus Meta stock. S&P 500 is up over 1%. Meta stock is down over 4%. Pull up a 3-month. S&P 500 up 4.6%. Meta stock down over 13%. Uh-oh. We're talking Meta's very weak, ladies and gentlemen, in regards to stock price. S&P 500's up over 10% in the past 6 months. Meta stock down over 15%. So we're talking about the divergence getting even bigger on a 6-month basis. Like, that's insane underperformance by Meta stock. It's just, I mean, the easiest way to say it is Meta stock has sucked the past 6 months, right? And then we look at a 1 year, it's still ugly. Maybe not as ugly as the past 6 months, but it's still ugly on a 1 year. S&P 500 up over 18% and Meta up a whopping 3% in the past year? What is going on? Right? Look at Meta. This is Meta. Meta's in the doghouse, ladies and gentlemen. It's in the doghouse. People don't want to own it. They've been selling it. Where are the big buyers for Meta stock? They're just non-existent. They're non-existent out there at the moment, right? Take a little higher view. Let's go up in the helicopter for a minute. Let's look over the city, okay? On a 5-year basis, Meta stock's up 144%, while the S&P 500's up 83%. Much better, right? Much better. Let's go up even higher. Let's go take an airplane up there, okay? We're going to fly around 35,000 feet. Since IPO, Meta stock's up almost 2,000%, 1,979%, while the S&P 500 is up 428%. A massive outperformance of Meta stock. If we look at since that Q4 2022 bottom, right, when the NASDAQ bottomed, and all those big tech stocks like Meta and all the others bottom, Meta's up 560% since then. The S&P 500 is up 78%, okay? And so with a stock like Meta, you gotta differentiate between what's going on short term, which, you know, anything a year and less is short term in regards to stock, and what's going on long term with the business model. And you want to look at the business model? We can look at the business model, but just understand, Meta factually is a great long-term stock. It has also factually been a horrible stock the past 6 months and the past year. There's just no debating that, right? There's no debating that. So that's just facts. But what is actually going on with the business model? Well, this is where Meta's revenue has trended. And we're right here. We're looking at 1000xstocks.com. This is where analysts expect Meta's revenues to trend. If we look at the operating cash flow on a trailing 12-month basis, it's never been better. Looking amazing. Look at the operating income of Meta and how that's been climbing. Unbelievable. Look at shareholder equity of Meta and where that's been trending. Look at the shares outstanding. They've been bringing that down. Like, these are all the things you want to see. You want to see revenue up and to the right. You want to see operating cash flow up and to the right. You want to see operating income up and to the right. These are just base business fundamentals of what you want to see. You want to see shares outstanding going down. You want to see shareholder equity going up, right? But let's make this even bigger. Let me show you something even more meaningful. Listen, if we look at the revenue growth Meta's been reporting recently, we're talking it's over 20%. Now, that's special. And the reason that's so special is we're talking about a company here with Meta. This is $1 trillion plus market cap. So the fact that they're able to grow revenue at a 20% plus clip is pretty shocking. No one else in big tech outside of NVIDIA has been growing revenue 20% plus clip. Not Apple, not Google, not Microsoft, not Amazon, right? They're the ones to do it. They're the ones to do it. Outside of NVIDIA, and obviously there's a huge chip cycle going on, so NVIDIA's revenues are going crazy and will continue to, and then AMD's revenues are just going to start going absolutely insane. But you look at big tech, like Meta's the one. It's the one with the big growth. So if you want big growth and you want exposure to big tech, you gotta look at Meta first and foremost, right? And with Meta, you could look at that and say that's more sustainable growth. Because obviously there's a massive chip cycle going on right now, right? And will for the next at least 2 to 4 years, right? But you could say maybe that's not as sustainable. You can make an argument for that, right? With a company like Meta, like it's not like they have some super cycle going on right now for their business model where it's like everybody needs this like certain chip that Meta has, right? Like they do need NVIDIA's chips and AMD chips and like Micron for memory, right? MU stock. Like Meta could be seen as much more sustainable in regards to this growth. And so to be growing at a 20% plus clip, the last quarter, if I recall, I believe they grew revenue 25% last quarter. I think on a constant currency basis, it might have been 26%. It's insane. Absolutely insane, right? So that matters significantly. If you even look at next year's expected revenue growth from analysts, 18%. Keep in mind, Meta comes in and beats analyst estimates regularly. So if analysts are expecting, 17.7% revenue growth next year, don't be surprised if Meta comes in at 19%, 20%, 21% and beats that number, okay? Gross margins 80% plus, net margins 30% plus. That's like the holy grail for a business model. If you can have your gross margins be 80% plus and net margins 30% plus, like you're running a freakish business essentially, okay? 2-year stack expected earnings per share growth is something very helpful. We have on advanced metrics for 1000x. Nearly 50%. Where are you getting that sort of growth in big tech land? Like that's insane. What? 2-year stack expected revenue growth, 40+%? These numbers are ridiculous. Absolutely ridiculous. Meta has, right? Now, additionally, this matters significantly. Zuckerberg is 41 years old now. He just entered his business prime. Think about what this man has built over the past 20 years, right? A company from nothing into this gigantic company that even the governments fear, right? Because it's so powerful. They have so many users on their platform. It's unreal, right? The man just entered his business prime. Your business prime is very different than being an athlete, right? Being an athlete, your prime is like, let's call it 19 to 29 years old. In business, it's very different. Your business prime is 40 to 65 years old, right? 40 to 65, and he just entered that bracket. So if this man wants to run this next 10, 20, 25 years, he's got it, right? He's absolutely got it. By the way, my camera situation's all messed up. I'm staying at, a resort right now. So, it's like, not the best situation, but I hope you guys understand, okay? Now, the concern is the spend that's going on with Meta, right? The CapEx 2024, 40 billion, roughly, just under 40 billion. 2025, 70 billion plus. 26 expected to be over 100 billion. So that's the concern with Meta, is while they're spending so much, Zuckerberg's spending's out of control again. And it's a big concern, it's a big worry out there, but who are we to doubt Zuck, right? I mean, look what the man has built. A company from nothing into $1 trillion plus company in 20 years? It's insane. Since this company went public, the stock's up almost 2,000%. He's got a company so powerful that governments fear it, right? And always looking in because they're like, it's so powerful, right? I mean, it's insane. And so, you can doubt Zuck here, you can doubt Zuck there, but I'm just like, do what you want. But I'm like, it's a man you don't want to doubt too much. Let's just put it that way. Like, he comes through. He always comes through. Now, additionally here, Meta has their Threads product, right? Threads has reached around 400 million monthly active users, and that was as of a couple quarters ago. I wouldn't be surprised if the number is much bigger now at this point in time. Keep in mind, Threads is basically untouched right now. What they're trying to do with Threads is I believe they're trying to take it to somewhere roughly around 1 billion users, and then they're going to worry about monetizing that platform. So you got to understand, Meta just in the past 2 years has launched a product here that has a potential to be worth $100 billion, if not several $100 billion. And they just launched it like that with a small team. It's insane. It's insane, right? And that's basically untouched right now. So that's not even a story really for 2026, 2027, but keep in mind 2028 and beyond, Threads could likely end up going into monetization time period when we're going to start getting significant revenue growth, and then you start having a new level of revenue growth at that particular time coming from Threads, right? WhatsApp is still early in regards to monetization of WhatsApp, and WhatsApp has over 3 billion monthly active users, and we're early there for monetization. So just understand the money they're going to make from WhatsApp is going to be insane over the next several years, right? Then they obviously own the two most powerful social platforms out there, Facebook and Instagram. It's insane, right? And so it's just an amazing company. It's one you kind of got to own, right? I wonder if that was a stock I bought today. We'll discuss that momentarily, okay? So that's Meta. That's what's going on there. The concern around spend. At the end of the day, it is what it is. It's been a phenomenal stock for me. It's going to continue to be a phenomenal stock for me. Where Meta stock goes in the next 3 months, who knows? Could I see Meta going 500 something in the next 3 months? That's possible. Could I see Meta bouncing back strong, and next thing you know, it's a $750 or $800 stock in the next 3 months? That's possible as well. So whatever happens, happens in the short term. But the long term, I'm pretty darn confident Meta's going to be an amazing stock over the next 5 years, over the next 3 years, over the next 7 years. There's no doubts in my mind. Zero doubts. Okay. Next up here, margin. Then we'll get into the 8 stocks I bought here today. Okay. So this was posted by one of our members in the private stock group. We have 3,000 plus members in there. I took a look at it. I didn't like what I saw. Okay. I hadn't seen the numbers. Remember, I've been unplugged for a bit here. Okay. But the newest margin data came out. We're at new all-time highs in regards to how much investors are, have out there on margin, right? What this shows me is, to be quite honest, guys, we need a 6 to 18 month drop in the market, right? I don't know if we're going to get that anytime soon, but we need it. That's the only way you can really kill off margin in a major way. Now, you're never going to take margin to zero, but in terms of getting it down quite a bit and getting people to be like, whew, I'm not taking risks, you need to make, A 1 week drop, a 1 month drop, a lot of times it doesn't scare people that bad to really get them out of margin, right? You need a 6 to 18 month drop. That brings down margin considerably. Look no different than 2020, right? And that was about a 2 to 3 month drop we had in 2020, but margin came down significantly during that time. Look also, I think one of the best examples, look to 2022. 2022, we had the market drop for right around a year roughly, right? And look what happened to margin during that drop. It came down significantly as the market dropped more and more month after month, right? Every time you thought the market might bounce back, it got hit even harder. That's how you really get margin down. So until we get a 6 to 18 month drop, unfortunately that number is going to climb, which I don't like it, because that just means you got a more powerful sell-off coming at some point in time. When that sell-off is, could be 6 months from now, 12 months from now, 18 months from now, 24 months from now, 36 months from now. It's going to come eventually. And it'll be a hard hit because margin's so high right now. But when exactly that happens, that's, one of the toughest predictions to make out there, right? And as they say, a broken clock is right twice a day. Now, to show you guys why you shouldn't mess with margin, because sometimes people think like, ooh, margin's exciting, like I can invest even more money, which means I'm going to make even more money. Okay, here's the issue, okay? Margin calls. You go ahead, you have $25,000 in your portfolio, you go ahead and margin out another $25,000, right? So now you have a $50,000 portfolio and you're thinking like, my stocks are all going to 2x, so now I'm going to take this, up to a $100,000 portfolio, all with only $25,000 of my own money, right? Sounds amazing, right? Oh my gosh, like I got $25,000, my stocks are going to double, and since I'm on margin, I'm going to go ahead and take this up to $100,000, right? And then I'm going to pay back my $25,000 loan, and now I'm going to have $75,000. Sounds beautiful in theory, but here's the issue. You get a 30% drop, right? Which, that's nothing crazy, right? Like a 30% drop, it's powerful, it hurts, but it's not like that's unheard of or that never happens. That happens all the time, especially if you own individual stocks. The moves are insane. I mean, look at 2022. Meta stock fell 75%. Like Shopify fell over 80%. Netflix stock fell like 80%. So a 30% when you're in individual stocks is not a lot, actually. Like that's kind of what you would expect from a decent sized drop in the market, right? So you get 30% down, right? Now you're down 60% because you're margined out, right? Plus you're facing margin calls, so you're having to sell stocks at really bad prices. It's a horrible situation to be in. If you've ever been there, you know what I'm talking about. It's awful. Ask anybody that's ever gone through a margin call. Brutal. One of the most brutal things you could ever face in the stock market. Absolutely brutal, okay? And so you got to understand, if you get a 50% drop and you're on margin heavy, you lose your whole portfolio. From a 50% drop, if you're heavy on margin, you lose everything. You're back to zero. Robert De Niro. That's what we're talking about here, ladies and gentlemen. It's serious. It is serious, and not in a good way, right? What you actually need to focus on. Don't focus on margin and thinking about, trying to be greedy and like, oh, the market's going to pop big and this stock's going to 2x and 3x and I need a margin. No. Focus. Keep it simple, okay? Focus on making money, as much money as you possibly can, okay? That's where you need to focus. Focus on researching stocks, running projections, invest as much as you possibly can, and repeat that every year. And as the years tick on, you'll end up having more money than you know what to do with, okay? It's a simple game. You mess around with margin, right? Might sound fun if it all goes right, but it might not go right. And many times when people are loading up on margin, it's the time you shouldn't be loading up on margin, right? That goes wrong, and then you set yourself way further back, and next thing you know, it takes you 2, 3, 4 years just to climb back to where you used to be because you went heavy on margin. Okay? Don't mess around with that stuff. Focus on these things. Keep it simple. Over 10, 15, 20 years, dude, you'll have more money than you ever know what to do with. Like, come on. That's what you got to actually do. Focus on that stuff I have there, right? I'll give you a good example. I've been in the market now 17 plus years, right? Where am I at financially now at this point in time? After all these years of investing, right? I saw these cool shoes on social media over the past like week. Nike 001, they're like Nike Mind 001s and 002s. You can't even get them, they're sold out, right? So, you know what I did? I paid like 2 times, 3 times the price because I just want them. And you know what? It's irrelevant. The amount of money I spent on those shoes is literally irrelevant because I've been doing this for so long. I built up to such a high net worth that $260, it doesn't matter. It's literally insignificant, right? In regards to my net worth. This is yesterday, I went to lunch with the kids at Flower Child. It's not like, kids, we got to go eat at McDonald's, right? There was a time when it was fast food, right? And it was like, shoot, I gotta eat the cheapest thing at Taco Bell and cheapest thing at Burger King to try to save some money. There was a time period like that. You're 17 years in this game doing what I do. You don't have to worry about that anymore. It's like, spend $60, $70 on the kids at lunch, like it's nothing, right? Go out to Cheesecake Factory last night, after tip, it's $170. It's irrelevant. But that's 17 years in the market, right? Go on vacation, stay at the Nobu Hotel in Miami, go to Nobu twice. It's not like I'm looking at the menu like, should I get that because this is expensive or blah, blah, blah. It's irrelevant. It doesn't even matter. But that's 17 years in the game, 17 years working my butt off, taking this serious, investing as much as possible, right? And then all these little expenses, which this is like all little stuff, like going out to eat, staying at hotels, like stuff like that. That's little money. It's irrelevant now, right? There was a time when this mattered significantly to me. That was 17 years ago. That was 15 years ago. That might even been 10 years ago. But as your net worth builds up and you do the stuff I'm talking about here, this other stuff, you're not worried about like, what hotel can I stay at? Let me find the cheapest one. I've got the cockroaches in it. Where can I eat? Where's the cheapest place to eat? Who cares about quality? Like, no. When I just think, I'm just like, what's the best, right? What's good? Because that little money stuff's irrelevant. Now, think about 17 years from now. If I'm in good health and I stay hungry, right? If I get hit by a bus, okay, doesn't happen. That's fine. Like, that just is what it is, right? Life. But if I'm in good health and I stay hungry, imagine what lifestyle will be like in 17 years from now, right? Imagine vacations. We're talking private jets, because that would be irrelevant then, right? If I got a private jet now, I'm gonna be stressing. That's a lot of money for me right now. If I got my own yacht right now, that's stressful. 17 years from now, I could have multiple yachts. It won't even matter, right? I could have homes instead of staying at resorts, like, I'm gonna stay at the Nobu Hotel or stay at a really nice place in Mexico. No. Could have homes in all these different vacation destinations because it's like little money stuff. Like that then is little money, right? So focus on the stuff that actually matters and stay away from the stuff that's gonna screw you over, like margin. That's like craziness, right? Like if you are younger in this game, right, which a lot of my audience is anywhere between 25 and 45, like you got plenty of time on your side. Just focus on this stuff right here. Don't get caught up in all that margin, all that other crap, man. And like I said, you'll have more money than you know what to do with, man. You'll have more than you know what to do with. So stay focused on the long term. Don't get caught up in all this short term crap, man. Okay, next up here, let's talk about 8 stocks I bought today, and that's a lot of stocks, okay? And we'll talk about the amounts and all that good stuff in just a moment. So first stock up here might surprise some people. I bought Meta today, and the reason it might surprise people is obviously I have so much invested in Meta already, right? Public count is what, $100 million position or whatever, right? I own in other portfolios as well, but Meta, I just can't look at Meta at these prices and be like, I'm not buying any. Could Meta go down to 515? Sure. Does it matter to me? No. Because I'm focused on where the stock goes over the next 3, 5, 7 years. And I believe Meta long-term is a $2,000 stock. $2,000. So, if Meta goes 515, 415 over the next 3-6 months, I don't care. I'll buy more shares. It's irrelevant. Okay? That's the first one I bought here. And, we spoke about that one already extensively. PayPal, number 2 of 8 here. PayPal is just a very attractive valuation on the stock. I mean, we're talking forward P on the stock somewhere in the 10 to 11 range. They've got nice revenue growth. Revenue growth has actually been accelerating recently. The earnings per share is very strong. They're buying back a ton of shares. Heck, it seems like they're going to buy back the whole company. The whole market cap's in the low $50 billion range right now. I like PayPal a lot. Alex Chris is doing a good job running the company. It's not the most exciting stock. It's not the 20% plus revenue growth story that like a Meta is, for instance, but it's just a very undervalued stock, and I got to buy it. Like, as simple as that, right? Elf on a shelf. This has been a high growth company over the years. Recently, the growth rates haven't been that great, but they're going to get back to very nice growth, in my opinion, here in 26. And then I think 27, you'll see, I mean, in the back half of 26, you'll likely see margins start to really move up. It's possible in the front half of the year too, but second half, I'm pretty dang confident. Like, margins will also move up considerably with great growth rates, and you'll see earnings per share accelerate significantly, right? So now, what happens with tariffs, all that stuff, like, that just is what it is. Like, they mitigate that stuff. They work with that stuff. It is what it is, okay? So elf on a shelf, love it. Next one up here, number 4 of 8, Celsius. Celsius Holdings, energy drink company. Alani deal's obviously been done for quite a while now. They got the distribution with Pepsi. Like, the company just does a phenomenal job. Like, absolutely amazing. I don't know what else to say about it. The earnings per share, you're going to see that skyrocket throughout 26 and 27. The revenue growth will moderate in 27, but 26 is going to be a huge revenue growth year for the company. And they have massive international expansion opportunity over the next 5 years. And they have, I think, a pretty significant opportunity to bring those margins up over the next 5 years as well. So Celsius, I really like that one. Number 5 of 8, ADBE, Adobe. Hated stock on Wall Street. No one wants to own this stock, right? Meanwhile, the business gets better. Look at the revenue growth of the company, right? Look at the earnings per share of the company. Look at the margins of the company. So I don't think people understand Adobe. No. I'm very confident people don't understand Adobe on Wall Street. And I believe over the next couple of years, they're going to understand it. All Adobe has to do is keep putting up the numbers. Keep putting up the numbers. And then I do think it would be helpful if the management team explained the business better and why it's almost impossible to compete with them. If they did that, I think the stock would reflect that very quickly. And so Adobe, I'm building that one out. My plan is to build this one as significantly as I can realistically here in the first quarter of the year, essentially, because I actually don't think the whole year will be bad for Adobe stock. I think the first quarter is rough, but after that, I'm actually very bullish on Adobe for the remainder of the year, and obviously bullish on Adobe for the next several years. So I just need to build out that position as quickly as possible. Number 6 of 8, Salesforce, CRM. Kind of Adobe situation, like the earnings per share is expected to skyrocket for the company. Solid revenue growth, like high single digits. Agentforce continues to take off. They got the acquisition going through. Actually, I think my belief is revenue growth is actually going to go to low double digits here very shortly. Another stock like Adobe, just keep putting up your numbers, man, and it will all take care of itself in the end. Next one. This might surprise some people. AMD. I think I'm addicted to buying AMD stock. I mean, the next several years is just so exciting. I still don't think Wall Street totally got it in regards to AMD, and I think they're starting to get it. And so that one, I've got set, well over 7 figures across my portfolios invested in this stock. And so my plan with AMD is, if that one gets that $400, $500 level, I'll probably unload some level of shares. But if they report better numbers, the bottom line is I believe AMD is on its way to join the $1 trillion boys club. Okay, right now this is market caps in the $300 billion range. I believe they're on their way over the next few years to join the $1 trillion boys club. And so for me, I can't not buy the stock. I just I got to stop buying it though, right? I don't want to get too overexposed to the stock having 7 figures plus in it, but had to buy it. And then last stock I bought up here is American Express, number 8 of 8. Just an easy peasy lemon squeezy stock to buy. I understand everything going on with, is Trump going to limit credit card rates? I spoke about that recently in that whole deal in this video here. The market is setting up for a real move. I discussed that subject specifically. That's one of many subjects I discussed in this video here. So if you want more opinion on that, watch that video. I think I also featured American Express on 5 stocks to buy now, but I can't 100% remember that, okay? As far as the moves here, you can see them there, a lot of, pretty much almost all of them were multi-$1,000 moves in regards to the buys, a lot of $5,000, $6,000 buys, and I'm looking forward to buying stocks on Friday as well. If you want to take your investing knowledge up to a much higher level and join the best group out there, that'll be pinned comment down there. Click on that, fill out a form. We'll see if we can get you access in there to the private group, and if you're a good fit, access to all my course curriculums, private Discord chat, 1000xstocks.com, exclusive weekly videos, see the moves I'm making, all that good stuff, pinned comment. I got some stocks making some huge moves here today. AMD's making a massive move up between 6 and 7%. We got to talk about AMD in this video. We're going to talk about Adobe in this video. We're going to talk about CRM, Salesforce in this video. That stock has been just not doing well. Let's just put it that way in regards to Salesforce. That stock is down huge again today. So we got to talk about what's going on with these stocks, my perspectives. Do I think these are buy the dip opportunities? Do I not? Right? We'll talk about all that in this video. AMD making a huge move here today. I got this screenshot here. You know I love this one. 2. Oh, just beautiful. Look at all those twos. So we'll talk about AMD, what's going on there. Wall Streeters had a lot of opinions on AMD today. I'll tell you what my thoughts and opinions are based upon what they have to say. And then at the end, we'll listen to some Wall Streeters. It's been a minute since we listened to any Wall Streeters, so we're going to get into that in this video here today. One thing only I need from you guys. If you could please, if you haven't done so already, just hit that little thumbs up icon. That's all I need from you. If you could just do that for me. If you want to be subscribed here to the channel, you can certainly subscribe. We are now at, how many subscribers do we have on this channel? I think it's 125,000, but don't quote me on that. Additionally, the private group just reopened. So if you want to join us in the private group, you want access to all my best course curriculums, all of those course curriculums. You want access to the private Discord chat. You want access to 1000xstocks.com. You want access to see the moves I'm making each week. You want access to just a million different things. That will be the pinned comment down there. Click on that, fill out a form so you can get you in there. I don't know how long we'll keep the private group open to new members, but it is open right now. It had been closed for a long time. Okay, so that will be pinned comment down there. Alrighty, so let's get rolling here. By the way, my X page is always linked in the description area if you ever want to follow me on X. Okay, so I thought it was worth mentioning. EL, okay, I understand not a lot of people care about this stock, not a lot of people pay attention. You just missed making a fortune. I don't know what other way to put it. This stock, since that whole liberation time period, is now up 130% versus S&P 500 up 39%. This stock has been an absolute beast. It's one of the most underrated stocks in the market. It's been an easy money play, and it continues to perform, and I think it's going to continue to perform well going forward in the future. I believe in the public count, I'm now pushing close to a 70% gain on my particular cost basis and whatnot. I didn't buy all of the bottom, obviously, so it would have been nice to. But yeah, I'm up around 70% on this. This stock continues to perform well. It's a makeup beauty company that owns a ton of high-end brands, and they are in a major comeback right now. And just you got to understand, in the market, a lot of people think it's just the only way you can make a lot of money in a quick amount of time is you got to find the next big tech stock that's gonna blow up or something. No, this is less than a year, 130% gain, absolutely unbelievable, with a stock that's a cosmetics company. Cosmetics, right? Okay, so CRM down 6% here today. So what's going on with CRM? What's my perspective here? So Salesforce sinking 6% for its worst drop in nearly 2 years after Anthropic rolled out co-work. So Claude, they have this Claude code for the rest of their work. This was shown off, went pretty viral on X last night from what I had seen at that particular time, right? They're talking about this launch lands right in Salesforce's own agent strategy with Agentforce, okay? So first off, I don't know if you guys have seen it. It's cool, no doubt, right? It's great, But my perspective on this, in regards to this, right, is this is not one company wins everything. Claude launched this new product, so Salesforce is done. They're finished. It's not how this works. Same thing, Salesforce launches some new product doesn't mean all other companies are irrelevant. They're all done. They're all finished. They can't grow. No. When we're talking about these sorts of services that do what this Claude product does, right, with what Agentforce does, you gotta understand, my viewpoint is every major business in the world, but certainly the United States of America, will have these sorts of products in the next 3 to 5 years. So, there's not just going to be one company is going to win the whole market, and it's like, whoop, they won. Like, no one's going to get no. Like, everybody's going to need these products and services, and there's going to be multiple winners here. And so I think Claude can be successful. I think Salesforce is going to be extremely successable. We're already seeing it in the early numbers over the past couple of quarters in regards to Agentforce and how that's building. So, yeah, like, I don't, it's not like one company wins and everybody else loses. It's just not the way it works, especially in SaaS. Like, you know how many successful SaaS businesses there are that are, we can talk about $10 billion plus companies. It's a lot. There's a lot of SaaS companies that are $10 billion plus. It's one of the best spaces to be in, right? And then there's so many SaaS companies that are, companies that do tens of millions of dollars of revenue a year, hundreds of millions of dollars of revenue a year that you probably never even heard of unless you're, use them for your specific business. And so just understand, like the market's going to overreact to every single new product launch. In Salesforce, you got to understand this about the stock price, okay? In a stock price of a stock and how it plays in with a news cycle like this, okay? Listen, it's very important. When you have a stock like a Salesforce that's clearly weak, like there's no debating that. Look at Salesforce stock price, not the financials. Look at the financial last 5 years, it's amazing, right? Look at the stock price of the past 5 years and tell me what you see. Weakness. Look at Salesforce the past year. Tell me what you see. Weakness. The stock price is incredibly weak. So any piece of news that could be seen as negative towards Salesforce causes selling. And it'll be like that until it's not anymore. And what is going to get people out of this, sell first, ask questions later mentality in regards to Salesforce? Salesforce has got to keep coming through with numbers. Keep growing Agentforce specifically. Let people know the numbers, have the numbers be good, and Salesforce stock will rebound just fine, and it'll be a huge money maker over the next few years, right? And everybody will look back and be like, oh gosh, remember when we were freaking out over every new thing that came out and always viewing it as a negative for Salesforce? Like, it's crazy, man. It's crazy, but it is what it is. I think something like this shows, if anything, Salesforce is working in the right direction in regards to all this, right? Now, that leads us to the next very weak stock, which is Adobe. This stock is just, in terms of the stock price, once again, you got to understand there's a difference between a stock price and how the company's financials are, okay? Salesforce and Adobe financials are better than they have ever been by a mile. That's just facts. That's not an opinion. It's just look at the numbers. It's better than it's ever been. It's way better than it was 3 years ago, 5 years ago, a year ago. Like, just how it is, right? The stock prices are absolute trash in the short term, right? And that's where you can actually find great arbitrage as a long-term investor. If you find companies who financials continue to get better and the valuation is very attractive and the financials are expected to continue to get better, but yet the stock price is garbage, that's where you find the biggest arbitrage opportunities, where you can find like an EL. Like, look at EL. I showed you that just a moment ago. 130% gain since that liberation time. I'm now up almost 70% on that. And, that was a stock that was absolute garbage, like, in terms of stock price. And then that's a little bit of a different situation because their financials were garbage. Adobe and Salesforce, they don't have that. Those financials are phenomenal, right? Oppenheimer downgrades Adobe to perform as demotions pile up. Oppenheimer is the latest financial firm to downgrade Adobe, re-rating the creation software company to perform from outperform. So not as big of a downgrade. Basically kind of like they still expect the stock to do well, just not like great, like an outperform rating would be. We had previously been bullish on Adobe as we expected its AI business momentum to reinvigorate growth in its digital media business, as Oppenheimer analysts in a detailed investor report on Tuesday, but this did not play out as we expected and is visible with digital media growth decelerating further in fiscal year 2025. In our view, Adobe has good medium-term opportunities and is a cheap stock. However, a challenging operating environment during the AI technology transition, leading to uninspiring and decelerating top-line growth, inconsistent execution with product cycles, durability concerns about the moat, lackluster investor interest, for owning software names. That is true, right? And down year-over-year operating margin guidance in fiscal year 2026 will likely weigh negatively on sentiment for the company's opportunities this year and limit near-term upside. Okay, everything you just laid out there, that's already been known. That's already priced in the stock, in my personal opinion. This is the latest downgrade to hit Adobe. Last week, BMO and Jefferies downgraded Adobe to market perform and hold, respectively. That followed KeyBank's downgrading the stock to underweight in mid-December. It also reflects a broader trend of software names not experiencing the same boost as hardware names from the AI boom. I mean, it's just they're just so bearish on Adobe. But let's just look at what is going on with Adobe's business model, okay? And let's just try to figure this out, okay? So what I'm showing you in front of your eyes right now is 1000xstocks.com. This is Adobe's trailing 12-month revenue. This is where we're at right now. This is where we're expected to go. Looks great. This is Adobe's margins. We're talking about net margins around that 30% number. We're talking about gross margins around 90%. That's unbelievable. This is Adobe's earnings per share trend. This is where we're at right now. This is where we're expected to go. This is Adobe's free cash flow. This is where we're at on a trailing 12-month basis. This is free cash flow per share. This is where we're at right now. Okay. This is the historical P ratio for Adobe versus where it's at now. You seen a trend? Cheap stock, financials better than they've ever been. Operating cash flow on a trailing 12-month. This is where we're at. Looks pretty darn good, eh? Operating income, this is where we're at on a trailing 12-month basis. As far as shares outstanding, they keep bringing them down because they're buying back tons of shares right now. Ladies and gentlemen, we have a situation here with Adobe that is very, very intriguing. It is very, very intriguing, where we have a stock that is trading at historically insanely cheap multiple. We have a financials in a business that looks better than it's ever been. We have a Wall Street community that seems like they couldn't be more negative. So it seems like at some point in time, and I think it's happening sooner rather than later, I think no matter what you throw at Adobe, it's not going to stick anymore because you already threw so much mud at it. You got no more mud. It's just going to slide right off now. And so that's the way I view Adobe, kind of looking past Q1, is this is a stock that has had so much mud slung on it that it's just not even going to matter anymore, right? The mud's just going to slide off. And this, at the end of the day, as long as you're a company like Adobe or Salesforce, and you come through and you just keep putting up your numbers, your stock will reflect that over time. The issue Salesforce and Adobe had in the past, and why those were bad stocks, let's say if you bought them 5 years ago, look at the P ratios where they were at 5 years ago. Look at Salesforce P ratio 5 years ago. Look at Adobe. They were not cheap stocks back then. Now they are. They're extremely attractively priced. Now those stocks are priced roughly in line with where the market in general is at, or actually undervalued, trading at P ratios under where the market in general trades at, which is crazy for companies that have still really good growth and have margins that these companies have. So I look at these two stocks as, in my opinion, easy stocks to buy. Easy. Like, that's just no other way to put it. I think it's just stocks you buy over the next, several months. You hold them for the next 2-3 years, and you look back and be like, oh, that was good. You made a lot of money on that. Like, that was pretty easy, right? Sometimes, there's just opportunities out there that are, in my opinion, easy opportunities. And I look at Adobe and Salesforce here, and I say those stocks are easy opportunities, right? And so, I will personally be buying more Salesforce stock and more Adobe stock, over the next, I would say, probably 2 to 3 months. And I like it. Next one up here, AMD. So AMD moving up huge. Okay, so what's going on here with AMD? What's my perspective on this? Well, Intel and AMD upgraded to overweight as server CPUs mostly sold out for 2026, KeyBank says. Okay, so let's go straight to the AMD part, okay? So AMD, which has a $270 price target from KeyBank, so quite a bit upside, has nearly sold out its server CPUs for the year. It's only like January, right? It's the first half of January at that, and they've already likely sold out their server CPUs for the year. Our supply chain checks indicate I do like when analysts actually do supply chain checks. It's kind of like getting information that you and I really couldn't get. So it is actually valuable. Like supply chain checks is always actually something that analysts provide that can be, I would say, beneficial. Our supply chain checks indicate the recent surge in hyperscaler demand has led to AMD to almost being completely sold out of server CPU in 2026 and is potentially considering a price increase of 10 to 15% in the first quarter 2026. We estimate server CPU for AMD will grow at least 50% this year. This year, ladies and gentlemen. Wow. KeyBank believes AMD MI255 and MI455 can support AI-related revenues of 14 to 15 billion this year. Regarding AI GPUs, now we're talking GPUs, we're seeing indications of 200,000 MI355. This is the one they just ramped somewhat recently. Well, I shouldn't say somewhat recently. Actually, it's probably been 6 months ago now. They started to really ramp 355 GPUs in the first half and significant ramp of MI455 in the second half. This is the huge deal for AMD. This is, 355 was was appetizer. 455, this is like the main course. And then the 500 series, that's going to be dessert. Okay. In the second half, of which 290,000 to 300,000 is targeted for its rack scale solutions, Helios, KeyBank noted. It remains unclear how many racks AMD will be able to ship. Similar to NVIDIA, we expect AMD revenue records significant amounts of MI455 Helios revenue as it sells its components to its partner ZT Systems, which ZT Systems was owned by AMD. They had bought them. Then they kind of sold off the manufacturing part. But then they kept part of the team. So a little bit of a confusing ordeal in regards to that. Is this telling us anything we likely don't know? The answer is no. Like, if you're up and up on the AMD story, you like, this is not a surprise. Like, we expected AMD's revenue is going to go insane over the next 3 years. 26 is a huge boost up year. 27 is going to be even a bigger boost year, and then 28 as well. So this is more just confirmation, right? Or it's giving people, Wall Streeters, that were not on the up and up in regards to AMD, right? Remember, AMD was under $100 during the April drama last year, right? So Wall Streeter was kind of caught off. Like, Wall Street was so caught up in NVIDIA last year, right, that they totally missed AMD. And so, like, they didn't understand the AMD story. They're like, oh, their numbers are really bad compared to NVIDIA. And it's like, yeah, they're behind. They were 2 to 3 years behind NVIDIA. But if you saw the products AMD was coming out with, you saw Lisa Su and the team caught up. And so that was going to start to show really in 26, 27, 28 in regards to revenues. And that's where we're going to have the flippening happening that I've been talking about in regards to AMD's revenue is going to start growing at a more rapid clip than NVIDIA. This is huge. Like, and Wall Street still doesn't even understand that. Wait till it actually happens. And that's only in a few quarters from now. You're going to see a flip. AMD's revenues growing faster than NVIDIA. They're going to be like, what? Oh my gosh, right? Like, AMD stock honestly shouldn't be up 7% today, but it is because a lot of these Wall Streeters didn't understand, like, oh, there's a lot of demand for AMD. Like, and then they wake up to this analyst note and supply chain checks and they're like, whoa, people really want this AMD product. So like, oh my God. It's like, dude, where you been at? Old news, but that's all fine. It takes you sometimes a while to catch up, Wall Streeters. Get with us. Get with us, okay? No. Additionally, this was kind of interesting here. Separately, B of A, this is a different analyst rating here. Separately, B of A provided a preview of AMD and Intel's kind of earnings results that should be coming here in a few weeks from now. The analyst said they expect AI servers to be the stronghold for compute, which AMD will likely beat and raise quickly. Growing data center exposure and product execution, 355X ramping. The analysts also expect Intel to benefit from healthy server shipments. So, yeah, B of A is expecting AMD to likely beat and raise. What's my opinion on that? Okay. Tell me something I don't know. Tell me something I don't know. I know AMD is going to beat and raise next quarter. It's what they do. It's what they're going to keep doing for a while. There's going to be a lot of beat and raises coming. There's going to be a lot of beat and raises coming. Welcome to the party, pal. Where you been at? Where you been at? And so, yeah, but Wall Street catching up, man. They're a little behind us, and that's fine. It's my job as a little guy out here. It's my job to always stay in front of them, right? Wall Streeters are the big fish. I just got to make sure I'm swimming way out in front. And, I get to my food first, and they come, and then we all have a party. And so, that's just what it is. Alrighty, let's listen to some Wall Streeters on their perspectives on this market, stocks, all that good stuff. And, we'll have some fun.
Closing bell. And he revisited what he told me several months ago about how he sees the backdrop right now. Listen.
I'll never forget the interview we had. We said this is the greatest investment environment I've ever seen. I still hold to that.
You do?
Yes, I think it's but I think what you're going to see now is much more volatility.
Okay, much more volatility. And maybe we're seeing some of that. Maybe some of it's self-induced by the Trump administration. The thing with Chair Powell obviously has made some people uneasy. What do you do in light of that and what could be a more volatile environment?
Well, it won't take much to see volatility increase. We just had 3 straight years of double-digit growth in the S&P, up 16% last year, 23% in 2024, and in 2023 we had 24%. So the expectations are high, the valuations are rich for the broader market overall, but the economy is gaining steam, clearly, at 5% in Atlanta Fed tracker. Consumers are doing their thing. They're consuming. AI, the momentum is still there. It's not going away. I do not believe 2026 will go away. I do think also you're seeing massive productivity gains. This is the big change for me, Scott. I mean, we haven't seen numbers like this in decades. I mean, we were growing productivity like 1-2%, 4.9% in the most recent quarter. Unit labor cost down 1.9. That is very, very healthy. And the productivity number is actually pretty good for inflation expectations. So add it all up, double-digit earnings. Going away from technology, though, that's where the expensive stocks are at. You clearly see the rotation happening, and I'm there. You know that, and I'm adding to them. We're going to talk about some of the things that I have been adding to, because I have conviction in the underlying strength of the economy. So volatility increases, use it to your advantage and buy on dips.
Okay, so she makes a point about the market being rich, right? Listen, the market itself, okay, you could make that debate, but I'm just saying that there's a lot of undervalued opportunities in the market, right? You look at some of these, 1 year, 2 year out forward Ps here. Meta's at a 20, CRM's at an 18, Adobe's at a 12, right? And look at next year's expected earnings per share growth of these companies. Look at the revenue growth of these companies, right? Like, my opinion is, like, a lot of these stocks are just trading way too cheap. Like, sure, you could look at a Palantir, you could look at a Tesla and be like, oh, man, so expensive, right? Overvalued. Okay, that's not the whole market. Because Palantir is trading at a 200 whatever P ratio does not mean that is an indication that the whole market is like, oh, it's a massive bubble. It's crazy. It's like, no, like, these companies are trading, depending on the company, like, very cheap. Like, yeah, Palantir's forward P looks crazy, 288. Yeah, Tesla looks crazy, 344. But that does not mean that's the whole market. So you gotta differentiate between some stocks that maybe have crazy valuations. You go look at Oklo and it's like, oh man, they're like a pre-revenue company trading at a crazy valuation. Okay, there's some of those stocks out there, but that's not the whole market. There's plenty of attractive stocks in this market right now. Google's ran pretty heavy, but I wouldn't call Google an expensive stock. You could make an argument that it's still very fair. Look at a stock like Google McDougal, Microsoft here. Like, these stocks are not like super expensive. They're kind of at, I would call them like fair value. Like, Google's at a fair value now. Microsoft's at a fair value. I wouldn't say they're overvalued though, right? If you want to pull up Apple, we can pull up Apple here. Let's take a peek at Apple's forward P, somewhere around, we can call it 30, 33. That's fair for Apple, given that they should grow earnings per share at a double-digit clip. So I can't really say they're overvalued. I can't say these big techs are undervalued though, but it's like fair value. So, that's just my opinion. But let's say Microsoft, was trading at a 24 forward P right now. You say that stock's very undervalued for one of the safest business models in the world with great growth. Like, shouldn't be trading that cheap, right? If Google was trading at 22 like it was last year for a lot of the year, like way too cheap. So, yeah, that's my perspective.
Do you believe what Rick Reeder had to say again yesterday, that this is the greatest investing environment?
Greatest might be further than I would go, but Rick is very bright, and I wouldn't disagree with him materially on just the overall positive backdrop. You have deregulation with an occasional insane tweet. That's really powerful. It's hard to quantify, but people are taking risks, and people are going into new businesses, and there's tons of M&A that you actually can qualify. It's a great last 12 months for M&A. You've got IPOs back. We'll get SpaceX maybe by the end of this year. I don't know. Is that $1 trillion IPO? Maybe you'll even get OpenAI. Is that $500 billion, $750 billion? I have no idea. Like, you can't look at a backdrop like this and say it's not a good environment. The real question is, are we already pricing in how good it is? And that's like the main debate. But look, I listened to the JP Morgan call this morning, and I know we're going to get there in a second. This is the CFO. Consumers and small businesses remain resilient. Continue to monitor leading indicators.
Before we go further here, I will explain a risk to the market. He talked about SpaceX going public, right? Talked about potentially OpenAI. Stripe could potentially go public at some point in time here. So those are massive companies that if they went public, they're actually a significant risk to the market. How? Why? Well, when you have those sorts of big IPOs like that, it can suck money out of other stocks because people want to buy, the traders want to go to the momentum. Like, oh, SpaceX is going to go crazy, right? OpenAI, like if Stripe goes public, those sorts of stocks, like, it's kind of like a pile-in. So you can get long-term investors to even pull money out of some stocks and kind of like creates this like vacuum out of money. But a lot of the trader momentum starts to funnel into those type of stocks. So where you actually see a lot of the biggest weakness many times can be other momentum related stocks that are kind of like hot stocks, right? That kind of shorter term trader swing type money comes out of those stocks actually decrease quite significantly in value the month leading up to those big IPOs, and the money kind of gets ready to obviously funnel into the new IPOs, right? So just something to keep in mind.
Any signs of stress. Despite weak consumer sentiment, trends in our data are largely consistent with historical norms. We're not seeing deterioration. So people are not happy with the price of things. We all get that. That's what the midterms are going to be about in a few months. But at the end of the day, they're spending with abandon. Delta is making more money in the front of the cabin than the entirety of the main cabin of the plane. It's K-shaped, it's this, it's that. In the end, revenues are going up. Profit margins will be 14, 15% this year for the S&P. Rates are either flat or maybe even lower. I don't know how you could argue with Rick materially that it's not a good backdrop to be making investments right now.
Jimmy, I'm glad Josh brought up the Delta information. It really is amazing when you look at it. The main cabin, okay, that's everything below first and business class, was down 7% year on year. Premium, which is first in business, was up 9%.
Yeah.
That screams K-shape. It represents what the greater economy has looked like. Not commenting on the Delta number specifically here, but what about the backdrop? You do have this, I think it's fair to say, this self-induced volatility. Now, when you had the self-induced volatility of Liberation Day, that was short-lived because parts of the market got unsettled to the degree that the administration became unsettled looking at the market, becoming unsettled and the prospect of it getting even worse. Some are warning that the attack on Powell will backfire on those who want cuts. Obviously, there's the issue of what the bond market may do. Stiefel says the S&P is going to consolidate around 7,000. Why? Because the, quote, emotional security blanket of rate cuts looks frayed. Schwab talks about today, buy to rate cuts. And then you have Wolf. We see several triggers on the horizon that could potentially spike bond volatility higher, including further worries about monetary policy and Fed independence. What do you think?
I don't think we need rate cuts. And I know there's a perception out there that the stock market is counting on rate cuts. I think that the market can fly without rate cuts because if we don't get them, it's for the right reasons. It's because the economy is growing. Stephanie, you just went through what the Atlanta Fed GDP is tracking, 5% for the fourth quarter. And in the third quarter, it was 4%. We've got unemployment at 4.4%. And we got CPI today, which was really quite benign. I mean, I think the core was 2.7, maybe it was 2.6% year over year. I'm perfectly fine with that. Now, I'm not saying we won't get rate cuts because it's too early to determine that, but I really don't think we need it. We've got tremendous fiscal stimulus coming from the budget bill. And what if, as is presumed to be the case, the Supreme Court overturns tariffs? What if they mandate that the tariffs have been collected, have to be refunded, and another $200 billion comes flooding into the market? You know, Josh said, and I agree with him, that, you know, the good news may be priced into the markets, but there may be a absolute waterfall of money coming into the economy that will goose this market and this economy higher. I don't think we need rate cuts.
You didn't address, though, the issue
K-shape?
of Powell. No, the issue of Powell and Fed independence.
Yep, let's hit it.
I don't. What do you think? I mean, is it a binary deal? The market's trying to look past it, not necessarily believing that it's going to go anywhere. However, if it's a Powell indicted market does something really bad, Powell not, then the market just blows it off. I mean, how do we think about it?
I think that the comments that were made yesterday by Ben Bernanke, Janet Yellen, Robert Rubin, and everybody else were right on the money, that in the long run, this does make us look like an emerging market economy. But I stressed it just there, in the long run. This is a market right now that's focused on the short term of everything that I just said, profit growth, economic growth. In the long run, it is a very bad idea to bring the chairman of the Federal Reserve under investigation. Because what it does is it says to anybody else on the board, whether you're the chair or a governor or a Federal Reserve Bank, that if you don't toe the line, you are likely to be the subject of an investigation or fired, like Lisa Cook.
Yeah, the market is ignoring it.
What I just said.
For now.
What I just said.
Market's ignoring it for now.
The short term, the market is focused on economic growth, profit growth, low unemployment, stimulus, potentially tariff rebates. But in the long run, this will matter.
And he's not going to be around in the spring. He leaves. So why are we even debating it?
Because some are suggesting that he may not leave altogether.
Even if he doesn't
and that
leave,
could be an issue because then the administration wouldn't get the seat that they so covet to further, at least in their minds, guarantee.
You're going to have a more dovish Fed. You're going to have a more dovish Fed. There's no question about it.
You don't care about this issue at all?
At all. Not at all. I just want them to get rates right.
Can't afford to.
We talked about this last time I was on Closing Bell. I mean, I just think they haven't gotten it right in so many years in terms of rate cuts or rate raises. I mean, so to me,
the Fed?
Yeah.
I don't understand. What do you mean they haven't gotten it right in so many years? The whole reason why you are bullish in part on the picture right now is because you can make the argument that they may have gotten it wrong at the beginning, but they've certainly gotten it right since.
I think that
inflation's low and the economy's good. What more do you want?
And I think that they can cut because we don't have a housing cycle. We need housing to recover. And if you don't have a housing cycle, you don't have an auto cycle. And it's remarkable that we're growing 5% without those two big components. You need those two to actually recover. And lower rates is the only thing that's going to help that.
Joe.
Monetary policy is easy. It's getting easier around the world. To Rick's comment, as far as this being the greatest investment environment, from an asset allocation perspective, he's 100% right.
And they are the largest asset manager in the world.
And in 2025, we had a paradigm shift. You had the opportunity to invest in what was underappreciated and non-appealing type of assets, whether it was investing in developed international, emerging market debt, or back here in small caps. So that opportunity creates a much healthier environment. As it relates to volatility, there's different types of volatility. The volatility environment that's most challenging is when capital exits, because when capital exits the market due to volatility, it doesn't return.
So is this the greatest investing environment of all time? The answer is, without question, yes. why would I say that? Well, there's no time period you can ever go back to where, as an individual investor from the retail side, an average Joe, you and me, right? There's never been a time period where you had as many great tools out there to research companies, to find out information. You want to know what a business model does, and how it works. Like, it's never been easier. Historical numbers in regards to, like, it's never been easier in any time in history to get like information like that to make you make an informed decision, right? It's never been easier to get news in relation to companies. Additionally, there's never been probably a less intelligent time from people looking at stocks from the Wall Street side. They just flip out over everything. Like, an analyst comes out and downgrades and stock sells off 10%, and all of a sudden they're like, oh, we did some channel checks and this is great, and the stock goes up 7%. And it's like, you didn't already know that. And so I think there's also a lot of wasted money out there on the Wall Street side that pushes stocks up to way too high of prices and gives you great opportunities to sell, and pushes other stocks down way too much from way too much selling pressure that gives you incredible buying opportunities that, you just never got these sorts of opportunities in the past. Like, this is a whole different level. So also the ability to, buy stocks so easily now on your phone, wherever you're at, like, there's no doubt this is the greatest investing environment we've ever seen, but it's going to get better, like, over the next 10, 20, 30, 50 years. But as of right now, this is the best. This is the best we ever had. So, in regards to market, is this the cheapest market? Absolutely not. It's a market that's at fair value, right? Are there incredible buying opportunities in this market? Absolutely. Are there some stocks that are very scary to invest in for the next 2, 3, 4 years that are, probably going down a lot? Or going to be stagnant? Absolutely. So, and that's where it really becomes very fun if you're a stock picker and you know what you're doing. And if you don't know what you're doing, you want to get up to a much higher level than where you're at, the pinned comment down there will be to apply to join a private group and get you all the access to all the course curriculums, teaching you everything I got up here that I've learned over the last 17 plus years in the market, as well as join our private Discord community. We have several hundred 7-figure plus investors in there. We have, so many 6-figure investors, it's not even funny. So we got an incredible community. It's over 3,000 members strong now at this point in time. And you also get access to exclusive videos and all that. That will be the pinned comment down there. And that's been closed to new members for quite some time, but it's now open to new members again. And we'll see how long we keep that open for in regards to new members, okay? No, while I was on vacation, it was very interesting in regards to the market. I posted this on my X page. You ever want to follow me on X? I always have it linked in the description area, all my videos. But I posted this before I went on vacation. I said, public count before unplugged vacation. It's at 3.753 mil. I said, let's see where it's at when I get back. Like, it should be interesting, right? And here it is, $3.829 million. So that means a public count gain about $76,000, which means all my portfolios combined for easily 6 figures or multi-6 figures while I was gone, which means peace out, folks. It was a nice video, and I'm going back on vacation. What is the point of being here? Like, if we can just, make all that money while we're gone, let's just go sip pina coladas all day, right? I could never leave you guys. I'm too addicted, okay? Too addicted. So a lot to get in today's video. I'm in Scottsdale, Arizona right now, not back in Vegas yet. My mom's about to turn 65, so I got to stay out here for her 65th birthday, but we will get back. If you didn't know, Scottsdale, very pretty area. Come visit sometime. I grew up in Arizona. I live in Vegas nowadays for the last 10 plus years, but Arizona, I always love Arizona. It's very pretty. A lot of people think it's just like sand and desert. No, it's more than that, okay? So, wow, do we have a lot to get through in today's video, okay? So, crude oil, very strange, like just strange stuff going on in the market in general, right? Like with everything that just happened in Venezuela, people are like, oh my gosh, crude prices are going to plummet now. This is great news. Yet crude's actually up in the past 5 days. Like that's the typical market for you. Everybody expects one thing and something else happens. It's like, really? Okay, crude oil is actually up. That's interesting, the last 5 days. 10-year, meanwhile, Trump essentially announced some things that could potentially bring the 10-year down significantly, mortgage rates down significantly, and yet we're not really seeing mortgage rates budge so far. That could change in the next few months, but as of right now, nothing's really changed. The 10-year hasn't really moved almost at all in the past 5 days. That's pretty much asleep right now, right? You have some stocks just making some crazy moves already this year. Look at the at Cheesecake Factory. This is a stock I've talked about a lot the last couple of years. If you're a big fan of the channel, you know I talk about cake a lot. Look at cake so far year to date. Keep in mind, I'm recording this video January 12th. January 12th. Cake stock is already up 17% for the year. It's on a rocket ship. It's like, how is that stock moving so big? We'll talk about things like that in this video here today. Look at a stock like Elf Beauty. Keep in mind the market's up a little bit so far this year, but it's not even close to what these stocks are up. Look at Elf Beauty. Elf on a Shelf is up almost 14% already this year. 12 days? 12 days into the year, that's not even 12 trading days into the year. We're just 12 days in general into the year. Like, what is going on? Estee Lauder stock's already moved almost 7%, right? Once again, it's January 12th. Like, this is wild. Look at the big dog, Amazon. This is one of my top picks for 2026 in regards to big tech stocks. Amazon, I'm expecting a great year, and so far it started out as a great year. Already up over 7% year to date. The big dog is rolling. Amazon was sleepy last year. I don't think it's going to stay sleepy this year. I think it's going to be a great year for Amazon stock, and we'll see if it is. But so far, it's looking like it's going to be a great year for Amazon stock, already up 7+%. Congratulations to any Amazon shareholders out there. Look at Celsius Beverage. Celsius Holdings up over 16% so far this year. This is another one of my top picks for 2026. If you watch the video I put out, the last video I recorded on this channel was this video right here, 5 stocks to buy now, January 2026. Looks like about 127,000 people got to see that, and thank you for everybody that checked it out. That was one of the 5 stocks I posted in that video. It was actually the second stock of those 5 stocks as I spoke about there as an incredible opportunity. And yeah, it's off to the races. Already a 16% move so far this year, 12 whole days into the year. Meanwhile, we have other stocks out there showing a lot of weakness. It's not like the whole market's strong. It's not like all stocks are strong. There's plenty of stocks out there that are showing weakness. Look at AMD. AMD. This stock's down about 5% so far this year. Like, what is going on with AMD, right? Like, the big announcements, everything that Lisa Su just showed off last week. It was a huge week for AMD in regards to news last week. And yet AMD stock is it's a really weak stock price right now. 5%. It might not stay that way, by the way, in regards to AMD, but it is like that right now. Look at a stock like American Express. This stock's down over 2.5% so far this year. T-Man came out, talked about he wants to cap credit card interest rates at 10%. We'll talk about if that's like a death nail for a stock like American Express, a credit card company, right? Very important subject. SoFi. This has significant ramifications that some people might be aware of or might not be aware of in regards to SoFi and how this could change things in regards to SoFi. So SoFi is actually not really doing anything so far this year, despite a lot of these other stocks that are kind of more growth plays, risk on plays, just absolutely ripping so far this year. And SoFi is just asleep, right? Look at a stock like Adobe. Adobe's been horrible stock the past 5 years. It was a horrible stock last year. And so far this year, it's starting out horrible again. 5.8% down already this year. It's so weak. Like, it's incredible how weak Adobe stock is. And the business is better than it's ever been. Profitability is better. The balance sheet, income statement, all that good stuff. Look at Salesforce. This is a stock that's been incredibly weak the past 5 years. Had a horrible year last year. It's already started this year bad. Down about 2% so far this year. These stocks are very weak. And it's like, what is going on here? Like, why are some of these stocks just so weak while others are so strong, right? So in today's video, we got a lot of stocks to discuss. We got a lot of market dynamics to discuss and what the market is setting up for, because I think that's a very important subject to get into now that I'm back from vacation. And there's honestly one thing and one thing only I need from you guys. I just need you to hit that little thumbs up icon. If you haven't already hit the little thumbs up button on this video, please do so now. And to everybody that's already done it, you didn't even need me to ask for it. Thank you so much. You guys are the best. And additionally, if you want to be subscribed here to the channel, you can certainly subscribe. If you want to say hello to me, say hello in the comments section. I'll be hearting comments and responding to some of you guys and all that good stuff. Also exciting, today we're finally opening back up the private group. It has been closed for a long time. I know a lot of you guys wanted in there. It's been closed for quite a while. We're opening it back up today. That will be the pinned comment to apply to join in there. Access to all my course curriculums, access to the private Discord chat, exclusive weekly videos, see the moves I'm making in my big dog portfolios, all that good stuff. That will be the pinned comment down there. I don't know how long we'll keep the private group open for, but it's going to be open right now. Okay. I'll just put it like that. All right. That will be the pinned comment down there. Alrighty. So I want to start out here with the big news that just kind of broke in the last 24 hours or so, right? Jerome Powell, the Fed, releases a statement. And the reason being is T-Man now is basically doing an investigation in regards to the Fed spending on, new buildings and things like that, right? And so some people look at that as a play, as it's just Trump trying to push Jerome Powell out before his term is over, essentially, right? And Jay Powell's out this year, no matter what, but it seems like Trump's trying to do something to get him out earlier. At least that's a view, right? And this is interesting because this is something honestly unprecedented that we've never seen in regards to a president trying to pretty much like force out, without saying he's forcing out, somebody like a Jerome Powell, right? And it's interesting the way the market's just looking through this. Like in past markets, if you said the president's going to do something like this, and then the chairman of the Fed is going to come out with a public video and everybody's going to be able to see this. Like if you said this was going to happen in past years, ladies and gentlemen, everybody would say the market's going to freaking tank. Are you kidding me? This thing's going down to Chinatown. What are we talking about here, right? And yet the market just looked right through this. No big deal, right? And I thought I would show you guys like why the market's kind of looking through something like this, right? This is a perfect example. This is a group chat with a couple friends. These friends are not really in the financial markets, but one friend sends the video, right? He saw it on X of Jerome Powell, right? And this friend says, he's spot on, in my opinion. Another friend says, he is an idiot, right? Both these friends both voted for Trump, but one is super far on the right. I'll let you guess which one that is. One's a little bit more toward the middle. And so this is becoming a political subject, right? And since it's getting more into politics than the market ends up just looking right through it. Like, okay, this is just politics, right? It's not, the market's not worried about it from an actual market standpoint. It's just thinking about it's a political related subject, and we're going to deal with it the way we deal with political related subjects, which is we don't care. We don't care. And so that's what the market's doing right now, right? Now, very important, everybody understands why is the market just treating this as this? Okay, listen. The market believes that regardless of the outcome of the situation, that the path of the Federal Reserve is going to stay the way it's going to stay. And nothing's actually going to change here. They're going to do some investigation into this, and they're probably not going to find anything of substance in terms of like removing Jerome Powell or something like that. And the Fed's going to stay in their place that they're going to stay. And if they're going to lower rates 2 to 3 times this year, that's what they're doing regardless of this investigation and whatever happens here. Like the path is the path in terms of lowering interest rates from here or staying the same. And so that's what the way the market's viewing it, right? And honestly, I can't say the market's wrong. I think the market's kind of viewing this in the right way, right? Now, this is more impactful when you understand the dynamics of the market in terms of Wall Streeters, right? Wall Street is the people that control the money, right? If I'll put it to you like this, okay? In 2026, it's going to be a much harder year to shake the market. Shake the market mean the Wall Streeters all sell out, okay? The reason it's harder to shake the market in 26 and 25 is 25, we had a few major spikes of volatility. Obviously, the biggest one being kind of, from like the end of February into April, right? And the Liberation Day and all that drama, huge spike in volatility. And so 25, especially the beginning, like the first half of 25 was really a year marked by big volatility. When you come off of a year of big volatility, it's hard to get the next year to be super volatile as well. Possible, but very difficult. Extremely difficult, right? And also, if you look at Trump's first term, he had kind of a cycle of 1 year volatility, the next year not volatility. 1 year volatility, the next year not volatility, right? So if you looked at 25, a very volatile year with some insane moves, you could look at 26 as kind of, that's an off year in terms of volatility, right? And then you could look at 27. Maybe we have another spike up in volatility again. And then maybe 28 is actually a pullback in regards to volatility, right? And so I spoke about that in this video here. Looks like about 93,000 people got to see it. My predictions for best stocks in 2026 and overall market performance, I spoke about like my expectations in regards to volatility. I don't think, unless we get a black swan event of some kind, like, which is, those could come, but those are hard to come by, a black swan event, right? Outside of a black swan event, it's hard for me to see a spike up in volatility like we had in 25. That was an insane spike we had in April of 2025. To get that sort of, I think the VIX went 50-60 level. I would say less than a 10% probability, if not less than a 5% probability that happens in 26. The only way you're really getting that, you need a black swan event to happen, which those are always possible. It's just those very rarely ever happen, right? You look at the VIX, and the proof is in the pudding. It's not like I'm just throwing out opinions. Like, this is facts, right? The VIX is down 22+% the past 3 months. Now think about everything that's transpired and all the worries over the past 3 months. The whole Venezuela situation, right? That just comes out of nowhere and people are like, whoa, what in the world? We got all the Fed drama, right? We got Trump wanting to do an investigation here. That's a whole dramatic situation. And also a lot of the members in the Federal Reserve are starting to become more divisive and starting to become, differing opinions now at this point in time. So you got Fed drama all over the place. You have China, Taiwan. People are looking at some of the military moves China's making, and it looks more and more aggressive toward Taiwan. But at the same time, people have been talking about China, Taiwan for years now at this point in time, right? It's just looking like people are getting a little more worried in regards to some of the military actions China's taking around Taiwan right now, right? You have this whole Greenland situation where U.S. might want to try to take over Greenland, and NATO is going to talk about protecting Greenland. Like, that's a weird situation, but that's a big thing that's talked about right now. You have the Supreme Court decision in regards to tariffs, and are they going to keep the tariffs on? Are they going to take them off? All that sort of stuff in the past 3 months, right? And then also next Fed leader. This is all going on. These are major significant things, and yet volatility's dying. Volatility's completely dying, despite all that wildness, craziness, all that drama, all that talk on X, right? These are all subjects that are talked about daily, tons of views. Oh my gosh, this is so big, right? And yet the market says, huh? What? Oh, Venezuela? Oh, Fed? Oh, what? Trump? Oh, what? Huh? That doesn't care, does not care, right? Now that leads me to a bigger point, right? If you watch the reaction channel, I'm sure a good amount of you guys watch the reaction channel. Also, Jeremy Lefebvre makes money. I'll put out some videos likely on that channel this week as well, right? If you watch that channel, what is the thing you took away from the last, couple videos I recorded, right? Here's what you took away. And here's why it matters. Wall Street is bullish on 2026. It's clear. It's clear in their price targets and all that. But they're scared about what? Q1. If you listen to those Wall Streeters, the one thing they bring up is worries about Q1. Why? Because of all this. So they're very, very worried about Q1. They're very, very concerned, right? And so what ends up happening is if people are actually worried, sometimes they'll sell before you get to Q1, right? If you're worried about like, things might go left in Q1, blah, 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 right? You end up selling before that particular time, and usually the move's already been made. And so to then get a big sell-off in Q1 is difficult. And here's where it starts to matter with the economy. The economic data could be good. Could be good. I'd say high probability it's good. The economic data you're going to see over the next 2 to 3 months, my opinion is it's going to be good economic data, right? Now that could trump, no pun intended, that could trump everything else that happens over the next 2 to 3 months. And if so, you're off to the races. Now, the economic data, why do I feel like that's pretty high probability of being good, okay? I looked at the earnings and the guidance of obviously all the companies that, matter to the market over the past, they came out with their earnings, and a lot of those companies reported anywhere between Halloween and the end of November, right? There was nothing there from the numbers and the guidance that made you say, oh my gosh, the economy's in trouble. Like, oh boy, earnings are in trouble, right? The government shutdown that already came and went, right? And then a ton of government employees got a ton of back pay in regards to that situation. So if anything, a ton of government people were, let's call it pockets full in December, January, right? I just was on vacation. I went to Miami. I went to, I had to fly into Cancun. Dude, I'd never seen the Cancun airport that busy. I've been going there for years. I'd never seen the Cancun airport that busy before. I'm talking about when we went and when we left. A zoo. An absolute zoo. We had to wait on the tarmac for quite a while to even, get to, unload the plane. And that was even come back to Vegas. Like travel, every plane was maxed. There's no open seats anywhere on any of the flights we had to take throughout that whole trip, right? The resort we stayed at, a little higher end resort, I would say. But here's the thing. Packed. I've never seen it that busy ever. And I've been going down there for years now. And I've never seen it that busy. It was insane. Absolutely insane. So, and then additionally, when you looked at the Black Friday numbers, Cyber Monday numbers, Adobe Analytics looks over a lot of those numbers. It looked good. Like, it looked really good as far as spending goes. And then also just anecdotally, or anecdotal, however you say that, right? Me being out there in the real world over the holiday season, dude, it was insane. So if you want to talk down the economy, I think it's going to be a very tough talk over the next few months, right? A year from now, things could change. 2 years from now, who knows, okay? But I think the economic data is going to be pretty dang good coming out for, the government shutdown period. Like, we moved past that, and a lot of the government data never even came out in regards to that. So now we're going to start getting a lot of new data in regards to the economy, and I think it's actually going to look pretty good. And then we're going to get into earnings season. Guidances could surprise the upside. As far as the numbers that come out of these companies, those could be, I think good, but not maybe great. And because of the whole government shutdown, maybe that hurt numbers during that particular time when government employees weren't getting paid, right? But like, if you're a company and you're looking at your numbers, it might actually be significantly stronger than where we were at January, February, March of last year. And so you might end up, and a lot of these companies are going to report their earnings in February. So keep in mind, you'll get the big earnings season. It's going to be February into March. Those numbers that you're going to come out as far as guidances go in February, March, it might be pretty good, ladies and gentlemen. And so this is just something to keep in mind here. And you might get some good economic data, okay? And so if you get that good economic data, you could be off to the races in regards to the market and continue to push up. That could help small cap stocks. That could help even like the financials. That could help big tech. I mean, there's a lot of positivity that could happen in the next 2 to 3 months, unless you get a black swan event. Now, that leads me to my next big point, which is people are still trying to go hard against betting against stocks, right? They're still in this mentality of like, we're at the top, stocks have peaked, like we're going to make a bunch of money betting against stocks. And so I have Cava up here. Cava, right? Popular restaurant chain that's growing rapidly right now. And this is a perfect example of what I'm talking about while I was on vacation right now, okay? So I'm at this pool. This was when we were in Miami. We stayed at a resort. It was called Nobu. It was a Nobu resort. Ate at the restaurant there, sushi restaurant, Nobu. Ooh, it was phenomenal. We ate there twice. So I'm sitting right here, right? And I'm also swimming in the pool a lot, swimming around. And then I get out of the pool and I'm just kind of like chilling. The beach is right over here, so I'm looking at the ocean and just kind of chilling, kind of drying off and stuff. And these two older gentlemen were laying down back here. And all of a sudden I hear the guy behind me, he's talking with the other older guy. These guys are probably 60, 70, somewhere there. He's like, I don't understand why Cava stock keeps moving up. I think it's going to go down. It keeps moving up. And I'm like, me, like, if I hear stock talk, even though I'm on an unplugged vacation, I'm like, oh, freak. Like, what's this guy talking about back here? Like, what's going on here, right? And so he's talking about, I think it's going to go down, blah, blah, blah. Next thing you know, he's on his phone. I think he's talking to a broker or maybe his financial advisor. I don't know. But he's talking to that individual and he's talking to him about put options. And he's like, okay, so I needed to go down to 52.50 to break even, blah, 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 right? By this certain date, I think February or March. Then he's talking about maybe going short the stock, right? And so he ends up, it sounded like he made about an $80,000 move. I never could understand if he bought put options or he shorted the stock with the $80,000. If he bought put options, that's a lot of money to put in put options, because obviously put options, you can expire, like those could expire worthless if the stock doesn't move to 52.50 by February, March, right? So he gets done, and so I have to go over to him. I said, hey, sorry for eavesdropping, but listen, like, just be careful betting against a stock like Cava. And he's like, oh, why, you like them? And I said, yeah, it's a dangerous stock to bet against. And I started explaining to him momentum. I started explaining to him, that they took the place of Chipotle. Kind of people are looking for growth in regards to restaurants. I was trying to explain to him that everybody knows the upcoming numbers are going to be garbage, but if they view it as a trough quarter, then it's going to continue to see momentum. And so, it's just you could potentially make money there, but I'm like, the squeeze is going to be difficult. It's not like this is an easy thing to get that stock to go down under 52.50 by, February or March, right? I said, do whatever you want. I just want to explain to you kind of the risk there, right? And these gentlemen, they kind of sounded like they were from kind of more of the private equity world. And so sometimes you get people that come from business success or private equity success, and then they like to dabble in the market, right? And these are two different disciplines. Just like I have zero experience in private equity. So could I go into private equity? Sure, I could, but that's not my specialty. That's a whole different set of skills you have to have there. Same thing with the market. And so, you want to know about my experience in market. I said, I've been doing this for 17 years now. I didn't tell him about my social media success. I didn't tell him about how much money I have. I didn't tell him about any of that, right? I like to just be low key. I just said, I've been in the market 17 years. I've been investing. I know these companies very well. And so just, want to just kind of let you know that. I'm sure the stock has just continued to explode to the upside, and so I'm sure he's probably wondering. He's like, man, who was that kid? Who was that kid? I'm a 36. I'm not really a kid, but, if you're 60, 70 years old, I probably look like a kid to you, right? And so he's probably like, who was that? Who was that guy that warned me in Miami at the pool, man? Somebody, like, who was he, right? But that's a dynamic you have in the market. You still have a lot of individuals that are trying to bet against these stocks, and that ends up creating even short squeezes to the upside, right? So, next up here, this is AI investor sentiment. We just had a big trend break, and that is we finally, ladies and gentlemen, just broke as far as more people, less people bearish than usual. So usually you have about 31% of AI investors basically bearish on the market for the next 6 months. We just broke that trend. Now 27%, 30% in the last 2 weeks. So we're finally under usual. Now listen, okay? If this trend continues to, let's call it, be under normal for the next 2 months, we could actually end up in problems in the second quarter to the third quarter of this year, where the market actually breaks negative. Usually what happens is people get over to the bearish side, or to the bullish side, right? The bearish side is under historical averages. Usually you had that for maybe 2 to 3 months, right? Everybody starts feeling good. They feel like we made it past all the risks, all the scary stuff. And then what happens is you run into trouble very shortly after that, essentially, right? And so there's just something to keep an eye on, but don't be surprised. Like if this, for the next, like, let's call it 7 to 10 weeks, if we're under usual bearish, don't be surprised if we run into problems in Q2, Q3. Do not be surprised at all. So just keep that in mind. I wanted to make everybody aware of that, okay? Now, why is a stock like Cake showing so much strength? 17+% year to date? Like, make that make sense, right? Explain that to me. Well, a few things here, right? First off, we just had on January 7th, Barclays maintain their underweight on Cake stock, right? So even despite Barclays coming out and being negative on Cake, it still is up 17+% year to date, right? And, these individuals are just clueless about these companies and things like that. People think these analysts are like so smart and they know so much. No. Listen, I'm showing you right now, like, what it takes to be a stock analyst on Wall Street, okay? You need to have a bachelor's degree in finance, econ, something like that. Dude, not hard. Trust me, not hard. You need to have a CFA designation. It's a plus, but it's not even necessary. Piece of cake. This is easy stuff, okay? Technical skills. You need to be advanced in Excel. You need to understand Bloomberg Terminal. Dude, put me to sleep. Easy. analytical skills, in-depth business, industry, and market analysis. Dude, any college kid can do this stuff. Like, that's in business. Like, this isn't complicated crap, right? And then you need to be able to communicate well. Oh, wow. There's nothing about how's your portfolio done? Are you an investor in the market? There's nothing of that, right? So you have a bunch of these analysts that come out and say this and say that. These people are not even investors. They're not even investors. These stock analysts that come out and upgrade, downgrade stocks and all this. Dude, almost all these guys and gals aren't even investors, and a lot of them aren't allowed to be investors either because of conflicts of interest and things like that. So they just like buy like a 401k. But it's not like this is like, oh man, this person was a great investor for 10 years and they proved that, and then, you know, they become an analyst on Wall Street. It's not how it works. Like, usually what happens is these people graduate from whatever college with some econ degree, some finance BS degree, right? And usually work as an intern at one of these financial institutions. They kiss enough butt and they finally get upgraded to like very entry level analysts, or somebody that's just underneath the analyst that's helping them out some of this research. And that's what it is, man. And so just understand, when these analysts come out and make calls, like, dude, these people don't even do this. Like, these are like, it's like the difference between like a guy who's analyzing NFL players and NBA players and soccer players versus the guys that are actually playing in the big games. I actually play in the big games. I'm actually in the Super Bowl every year. These guys are just on TV talking. They never even played in a game. They never made it to the pros. They never made it to the big leagues, right? When they got millions of dollars of their own money invested in individual stocks, they were there in the Super Bowl. They're playing the big games. But these guys aren't doing that. These guys and gals are not doing that, okay? So just understand that about these analysts. Now, you look at a stock like Cake. What's going on here, right? If you look from mid-October, the stock was $56, $57, right, in mid-October. By the time you started approaching Thanksgiving and kind of toward the end of November, the stock got all the way down to the low 40s, like $43, $44 a share, right? The reason this happened, and then you had a massive bounce back, is you had tax loss harvesting, which was part of it, right? You had some people that got in Cake at some, you know, high 50s into the 60s, and they had gains in other stocks. They're looking for something to write it off against. So you had some tax loss harvesting there. But also you had the government shutdown, which was leading a lot of people to worry about Cake's comp store sales, North Italia, Flower Child, things like that, right? And potentially missing numbers. So that was a whole worry situation. And then right around here is when the government shutdown ended, right? And tax loss harvesting kind of got over in Cake stock as well. You had a little bit here and there, but it wasn't anything major in regards to that. And look at Cake stock's up 37+%. Then you also had simultaneously right around here the holiday spending numbers start to come out, right? As in regards to Black Friday, Cyber Monday, it looked strong. So anybody that was predicting like, oh, the consumers got no money, they magically ran out of money, like, money just all disappeared, they're not going to spend. Nope, that got taken right out. By the time you got to early December, like, everybody was like, no, people got money. Like, they're out here spending like it's last Christmas, right? Like, it's insane. And so, and then ever since this year started, it's just been on an absolute ripper of a rally, right? But yeah, 37% the stock has now moved from those lows kind of around Thanksgiving roughly, right? Now you look at a stock like Duolingo, Little Dingo. Oh, brutal, man. Absolutely brutal. Like, Duolingo shareholders are just getting absolutely wrecked day after day, week after week, month after month. I mean, that's a stock that you look at the numbers and it's like, man, the numbers look great. Look at the user numbers, look at the revenue, you can even look at the EPS. It looks great, but the stock just gets pummeled constantly. Every time you get a little hope in regards to stock, it's just right down another 7+% here today. I believe the CFO's leaving the company. It's just, you know, it's just bad news after bad news, even though the numbers still look really good, right? Now, if you've been following me a while, you know Duolingo is a stock I bet against last year when it was very popular and very hyped, right? And I bought put options on this stock that expired March 20th, 2026. I bought 20 contracts in total in regards to this, right? And I posted this on X here today. I said Duolingo stock was $343 on the day I posted this. Duolingo stock is now $164, but Duolingo stock was even higher when I actually initially placed this put option move. I believe Duolingo at that time was easily 350 plus, if not 360, 370. I was looking at the valuation. I was thinking kind of where the numbers were headed and then where the sentiment was headed, and I figured it was probably going, let's just call it very negative, right? And so let's take a look at where those put options are now as far as price go for that hedge, right? Well, for those 260s at that particular March 20th, 2026 date, the midpoint on those is around $97. Okay, so let's go ahead and do a little math. So 20 contracts, and each contract represents 100 underlying shares. So you got to take 20 times 100, and we're going to times out by $97. $194,000. Those put options would now be worth, if I kept them. I made like 50-something% on them quick, and I took my profit, and I ran, and I regret it. Because I could have turned 30, I don't know, if the hedge was 30-something thousand dollars, I could have turned into $194,000 if I just kept it a few more months. $194,000. So, time in the market is the most important thing. But time in the market, like if in regards to individual stocks, it's important, man. It's very important. Like the difference between you buying a stock a little too early or selling stock a little too early or calls or puts, dude, it can matter a lot. We're talking tens of thousands or hundreds of thousands of dollars of difference just in a matter of a few months. It's significant. That's on the upside and downside. For reference, I found the cheapest Ferrari Roma. You guys know I got a Roma in Vegas, right? The cheapest Roma on Ferrari's website. This one's got 3,300 miles on it. $189,000. So with those put options there that I bought $30-something thousand worth, you can now buy yourself a Ferrari Roma. Cash money, man. There you go. Now, next up here, Trump talking about he wants a 10% cap on credit card rates, right? I'm worried about this I'm thinking about it in regards to like American Express and SoFi, two stocks I own, right? First off, this might not go through, so do keep that in mind. Second to keep in mind here, it does have ramifications for the fact that if you have to cap at 10%, some people might not be able to get credit cards that could have gotten credit cards before because the model just doesn't work, right? It could also put some credit card companies into a model where they charge, kind of like American Express does for certain credit cards and things like that, rather than give you a credit card for free, right, with no fee. Something to kind of keep in mind there. And, if we're thinking about how much a credit card company would allow, they might take that amount down. So let's say before they would give a consumer $2,000 credit line. They might still give that person a credit card, but they might cap their credit line at $500 or something like that, or $700, right? So it's something you got to consider, right? Now, American Express for me is a newish position, right? $55,000 I have invested in the public account here. Really haven't, the position hasn't done anything for me as of yet. Started buying right around Halloween, bought some shares right after Christmas, and my plan is to continue to buy this one. We'll come back to American Express and my thoughts here in just a moment, right? SoFi stock actually has a higher level of risk in regards to this if it does go through and they cap at 10%. And here's why. Okay, and SoFi as a stock has done me amazing, up 220%, up $91,000. Like nothing but good things to say about it. But this does come with risk for SoFi, and here's why. SoFi is a stock that they definitely benefit in a major way from the crazy high fees credit card companies charge. So, it's very commonplace that if you have to pay interest on a credit card, it could be 25%. So let's say you're in that situation and then you get a little more financially literate, you start realizing somebody like a SoFi, you could take out a personal loan with SoFi, right? At maybe 10% rate. Go ahead and use that money to pay off your credit card, which is maybe at 25%, and you just got a huge arbitrage there, right? That's going to make, now you pay an interest of 10% or 12% through SoFi versus 25% for the credit card company. That's significant. That's like a lot of money difference. So SoFi definitely benefits from that because people realize this, word gets around like, oh, you got $8,000 in credit card debt, you're paying 26% to the credit card company, you should take out a SoFi personal loan. That's what I did, blah, 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 right? And then that person goes ahead and does it. They pay off the credit card, right, with that money, and then they start paying SoFi. So then SoFi is now making money, and they just acquired a customer that might not have been a SoFi customer previously, right? Now they got somebody in the SoFi ecosystem. Maybe now they can sell them a savings account, a checking account, a future mortgage down the road, right? A car loan. They have a relationship because now that person has a loan with SoFi. So it's been phenomenal from customer acquisition standpoint in regards to new customers or existing customers that maybe, had some sort of relationship with SoFi, but now they have another product with SoFi. So it is significant. But once again, is this going to actually go through? I don't think so. I think it's just one of those things that it's more politics, right? It looks good. Like people are like, oh, yay, like credit cards. I don't have to pay as big a interest. Like I'm going to vote for Trump, like it seems a little bit more of a political related play than actually going through in regards to actually capping at 10%. But it's possible. And you just got to understand it does come with risk for a stock like SoFi in regards to if this actually goes through, it could hurt SoFi from that business standpoint in the future. So just something to kind of keep in mind there. It doesn't mean it's like, oh, it's the end of SoFi. Like SoFi's done if this goes through. No, it doesn't work like that. But could it hurt potentially new customers in the future in regards to those numbers? It could. So just keep in mind, but once again, that's not super realistic. No, American Express, okay? In regards to American Express in this situation, listen, American Express, this isn't even a big risk for American Express, okay? I personally carry 2 credit cards with me, right? One is Sapphire Reserve. That's a business credit card, so I only use that as like an emergency credit card, but it's also for all like business expenses, but I keep it in my wallet, right? The real credit card I use is right here, American Express. So I go do anything, I'm using my American Express all the time, right? People like me are American Express's customer base. Now, how much interest do I pay a year to American Express? The answer is 0, absolutely 0, right? Because I use my American Express, okay, swipe it here, use it here, and guess what happens? It gets paid off right away. We never even accrue any interest. We never pay any interest to American Express, right? We use American Express and we also pay to use their credit cards, but because we actually get much more benefit than we don't in regards to the situation, because all the benefits American Express has, which, I'm not going to tell you all that. If you want to look into that, you can look into that, right? And so American Express customer base is people like myself that are never paying, like we're higher income individuals, higher credit scores, like we're never paying that 25% interest. We never paying any interest. So it's not like American Express is making bank off of us. No, like that's not American Express business model, really. They want to go after higher income. They want to go after somebody that's going to spend $100,000 a year on their credit cards, if not multi-6 figures, if not 7 figures a year, big spenders, right? That's what American Express wants. Or people that are going to spend 5 figures, multi-5 figures on their credit cards throughout a year, because all those little fees is where they actually make a lot of money, plus the membership model, right? If you got American Express Platinum, I think they went from $6.95 to $8.95. My wife has that particular card, right? I have that gold one, which I think they just went up on that one somewhat recently in the last year or two, I believe, on that one. And I think she said that one's like $345 a year or $395 a year, something like that, right? So they have kind of a little bit more of like a Costco business model, if you understand like how Costco business model works, right? And then you get a lot of benefits from it. So for American Express, I'm like, this is ridiculous. Like the fact that stock sells off, I'm like, I don't think people understand American Express business model, just to be quite frank, right? No, a business model like Capital One, we're talking a little different here, right? Capital One definitely can have more risk in regards to this, because Capital One counts much more on what I would call at-risk borrowers, people with low credit scores or no credit scores. My first credit card I ever got in my life, way back in the day, 100 years ago, was Capital One, because I was like, oh, I want to try to build my credit. And I don't think anybody else, I had no credit, and my parents didn't have credit, so I was like on my own. So it was like how am I going to get, like, and guess who's there for me? Capital One. I think they gave me a $400 or $500 limit, right? That was my very first credit card I ever had, Capital One. And so a company like Capital One, they might be more at risk. They have a different clientele base than somebody like an American Express. So I see Capital One down 6.5%. I actually think that business model should be down a little bit more. I see a stock like American Express down 4% today. I'm like, that stock shouldn't be down that much, right? So different, and also, once again, this might not even happen. So we're talking about something that's like a maybe, like I would call a lower probability than higher probability in regards to this, right? And so American Express, AXP for me, is an easy buy. Like if this stock is weak in the short term here because of this worries, I think we'll just look back and be like, that was silly. What a great buying opportunity in regards to American Express. So I would love to buy as many American Express shares as I can possibly get my hands on over this next bit of time, right? Next up here, it's a long video. Holy smokes, man. It's been a minute since I recorded a video. And like, I wish I brought some water out here or something. I got nothing to drink, and I'm recording this, talking nonstop for 42 minutes. Whew, my throat's I got some damage, okay? American Express trades at too low of forward P right now. We're around let's call it low 20s forward P for the stock. That's way too low. Given the protection of the business model and how great their clientele base is, this is way too low for the stock. Also, I think analysts are too low in their projections. They're kind of expecting like 3-4% revenue growth. I think American Express is going to easily be 5% plus, if not closer to 7 and 9% over the next couple years here in regards to revenue growth. I look at the membership fees just went up, right, on a few of their credit cards. That's going to help definitely boost revenue, no doubt about that. They're always acquiring new customers, and additionally, it looks like spend out there is pretty strong. And then also you have inflation all the time in that, we can call it 2.5% to 3.5%. So you're almost guaranteed to get a 2.5% to 3.5% bump on revenue just based upon everything going up in price, right? Then you talk about maybe the consumer being in a little better spot over the next year or two than they were over the last couple of years. And then you talk about membership fees going on, and it's not hard or impossible to see how American Express can grow, revenue 6%, 7%, 8%, if not 9% plus over the next few years. So just something to kind of keep in mind there, okay? Listen, ladies and gentlemen, stay focused on the long term in 26. There's going to be a bunch of short-term crap that happens. Stay focused on the long term, okay? We're going to talk over the next few days about AMD, about Adobe, about Salesforce, about Nike, about all these other stocks, Elf on a Shelf. We'll get into all those as well, probably Celsius. So keep an eye out for reaction channel videos this week. I'll also probably put out another main channel video or two this week as well. So just be ready to rock and roll, folks. We're getting back to busy times here, okay? And we're starting off with a 44-minute banger, okay? Appreciate y'all for joining me. Once again, the private group is open for right now. It's open for right now. Okay, that is a pinned comment down there. Access to all my course curriculums, Become a Master Stock Market Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, my Valuation Mastery, how to actually value stocks properly, right? Exclusive weekly videos from me, see the moves I'm making in my portfolios. We'll send you your Steel membership cards, all that good stuff. That'll be pinned comment down there. Much love and have a great day.